The two-day policy meeting today, investors grappling with the idea of higher rates for longer. Ed Yardeni of Yardeni Research says the higher rate environment isn't anything new or not necessarily anything bad.
So 4.5% is kind of where the bond yield should be in a return to the old normal, and I think that's what we're doing. I think the economy and the stock market have already demonstrated that they can both live with these kind of levels of interest rates.
Data this morning that shows new home construction in the U.S. dropping in August to the lowest level since June of 2020. S&P 500 right now 19 points lower. That's down about 0.5%, 44.32 on the index. The Dow Jones Industrial Average 122 points lower. That's down 0.4%. NASDAQ 100 down 130 points. That's down to 0.8%. Brent crude up $1.01, 95.43 on the international benchmark. And the 10-year yield right now 3 basis points higher. That is at 4.33. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're also streaming live on YouTube. So you can head over to youtube.com, search Bloomberg Radio, search Bloomberg Global News. Either way will get you to our feed. As John was just reporting, a little bit of red on the screen here. The S&P off about 0.5%. Let's see where the action is under the hood. There's some IPO stuff going on. Lots to talk about. We do that with Bailey Lipschultz. He covers all the equity markets for Bloomberg News. He joins us live here in our Bloomberg Interactive Broker studio. Bailey, what are you looking at?
Yeah, a bit of a risk-off mood. Obviously, you're seeing consumer discretionary and tech worst performers in the S&P 500. Among the worst performers and the biggest laggards, Disney company is down 2.9%.
But they're investing in the theme park business. That's the good part of their business.
I'm a big fan of it, but apparently investors don't love it. Obviously, there's a lot of uncertainty around what they're going to do with the networks. But
Bailey, when was the last time you went to a Disney theme park?
2018 or 2019, one of the two. I can't remember.
Just for fun?
My fiance and I went down for we weren't engaged then, but the wine weekend at Epcot. It's like food and wine tour of the world.
Nice.
Yeah.
So many people go to Disney to drink. Have you noticed that?
The
Disney
English pub at Epcot, one of my favorite places. Kids go off, do the pirate ride and all that. I'll be here.
Exactly. They go to Space Mountain, and you're drinking at Epcot. I went to Euro Disney once with the family, and I was already 18, so way too cool for that. But they have like beers of the world thing there. So I just sat around drinking all afternoon. I think a lot of
they're spending
people do that.
$60 billion over the next 10 years. I'm not sure it's on like new IPA taps. I'm sure there's some other stuff too coming.
Maybe they're going to embrace other forms of adult entertainment, you know?
I don't think so.
I have to imagine the margins are sky high, though, if you're selling beer at Disney.
Did you see, yeah, for sure, right? Because you're going to pay whatever.
$17 a beer?
Exactly. Did you see, I think Ken Griffin was on CNBC yesterday and saying, like, I don't know what in the heck DeSantis is thinking to pick a fight with Disney, which is bad news for RD because, you know, he counts on money from big spenders like Ken Griffin.
Well, Ken Griffin was their full-throated support. Not anymore.
Yeah.
So I'll have to see. Yeah, the biggest employer in the state, the biggest taxpayer in the state. I don't see how that's good business, but he does him. What else you got?
One of the laggards in the smaller space is Rocket Lab, down 10.5%, ticker RKLB. This coming after a failed satellite launch mission. They're going to look into what caused the issue for the failed mission and how that could impact future endeavors and obviously their quarterly results. So that stock down, again, 10.5%, trading at the lowest level since late May earlier this year. Another stock on my radar is Block Inc., down 2.8%. This coming after their Square CEO is going to leave the company. So a little bit of uncertainty. Most sell-side analysts saying it's more noise than signal, but
wait, Jack is back?
Jack is the man again in charge of the Square business.
Jack Dorsey is coming back, right? I don't know if that's good news for shareholders or like a risk.
Sell side, obviously their job's to sell stock. They welcomed him coming back, but it seems a bit of a surprise to the outside observer, at least. You know, I don't necessarily follow Block Inc. On a day-to-day basis, but analysts kind of a little bit cautious just given kind of the track record of Alyssa Henry, the CEO of its Square business, who had been at the company for about 9 years.
I heard an interesting take yesterday on why Elon Musk spent so much money on Twitter. You know, everybody's like, why did he blow $44 billion on that? Like, what an extreme waste of money. But even though he's the richest man in the world, this anonymous person said to me, all that money was locked up in Tesla, and he couldn't get it out. So this allowed him to at least sell like 20 billion worth of shares, which he wouldn't have been able to really cash out for any other excuse anyway. So he didn't care if he overpaid. That was the argument I heard.
Yeah, I'm not buying that. We had an IPO price, didn't we?
We had Instacart priced at $30, the top end of an already raised marketed range. So we should be getting indications in the next few minutes, and that'll open up expected this afternoon.
Now, of course, let's go to the Matt Miller over-under on the opening trade. When is this thing going to open, Matt?
Well, is it NASDAQ?
Yeah.
Okay, so I'm going to say afternoon.
Afternoon?
Wow.
Yeah.
All right. I like my 11:30. I'm sticking
That
with
sounds
it.
like an NYSE time, though.
Does
Because
it?
you're old school,
Yep.
and that's what they would push for on the floor. But remember, Facebook
Well,
was
my
NASDAQ.
job as a stabilizing agent. I open it when I want to open it, and it's just a question when I have a really good book and when I've identified maybe 5, 6, 7, 8 buyers out there to buy at my first print. So if it opens at, say, 36 today, I know X, Y, and Z are going to buy stock at 36.
Does Instacart wish that they'd gone public
Without a
2
doubt.
years ago?
Oh,
There's
yeah.
no doubt. Their last private round was $39 billion in 2021. They're going public just south of $10 billion. So
Why didn't they cash out then?
they've been
I would
wanting
say
to.
two reasons. One, they could raise capital in the private markets, so at a great valuation. So why go to the public markets and have to deal with all the headwinds of being a public company?
Doing it now.
Right. But two, I'm not sure the market was open for a company that at that point wasn't making money or that kind of thing. Maybe it wasn't ready to hit the public markets. But you're right. But I mean,
What were the IPOs like? 2020, 2021, 2022? Was it up?
I mean, the last big one the biggest IPO prior to ARM was Rivian in November 2021, and that was a $13.8 billion offering, I want to say.
markets are ripping then.
Obviously, yeah, that was one of the ones we wrote about on the markets desk about it adding, a Volkswagen in market cap.
That was one you definitely didn't want to buy. But everybody wanted to buy
Everyone
it.
wanted to buy. It's a great trade. It's not a great investment.
The chart just goes down and to the right. I mean, that was like Rivian's high was the day after their IPO, right? So
I'm pulling it up right now.
have you driven a Rivian?
I haven't. I have Bloomberg Surveillance has a friend who has a Rivian.
Okay.
And he's offered me to drive it. I really do want to drive it.
Are they still making them? Like, are they cranking them
Oh,
out?
yeah.
Okay.
And by the way, dude, 850 horsepower with the quad motor option. Like, that thing is a beast. I really want to drive one. I think I might want to own one.
What do they cost?
But they're very expensive. I priced one out at like 80 or 90, I think.
That's nothing. The Ford F-150 Lightning that
Well,
I was tooling around was 94.
now I'm driving a Jeep Grand Wagoneer.
Yeah.
The big behemoth. That thing, in the trim that I have it, 113 grand. But I think in a preview of Friday's What's Matt Miller driving this week,
Right.
I'm going to say I'd rather have the Jeep Grand Wagoneer than a Rolls Royce.
Wow.
It is unbelievably luxurious. Just
All right.
unbelievable luxury.
But isn't this supposed to be for people like on ranches and farms that own Jeeps or something? Or is this
no, it's a
tooling
Grand
around-
Wagoneer. It's not the Wrangler. It's the
Okay.
big family truckster, right? I can put, the Fed in the back.
All right.
And they could all watch TV. So it's got everything. Massaging seats. Like, each seat is ventilated, not just the front ones. And it's got this new inline 6 Hurricane 510 horsepower engine. Love it.
Love it.
Yeah.
I got the new BMW, and my old BMW had count them, one cup holder. The Germans aren't into like the whole comfort thing.
Yeah.
But that's funny. The first thing we looked at when we were looking at the new ones was they have 2 cup holders and then cup holders in the door, so they kind of got the memo from America. We like our big gulps.
Yeah.
And so you got to have the cup holders. So anyway, Bailey, thanks so much for joining us there. Bailey Lipschultz, he covers the markets here. We are waiting.
No, I wanted to double check myself on Rivian. What was the high for Rivian? The highest point Rivian stock ever hit. Looks like it was on the day of the IPO.
Yeah.
The high was $120
And
No. That's an intraday high was a week later at 179.47.
Okay. I had to push the 5-year button on my. Okay, so 172
And
is
today
what I
it's
see
trading at?
for a closing high.
Closing high, yeah.
And today it's trading at?
And today it's trading at $22.12.
Okay, there you go. So
bullet
not a successful
you hopefully
transaction.
avoided.
Yes, exactly. All right, Billy, thanks so much. We appreciate that. President Biden was supposed to speak to the UN at 10 a.m. Wall Street time.
Anne-Marie Horton actually told us he's going to be a little bit late.
Okay, but can you be
he
late?
is President Biden.
Can you be late to the UN?
Has he ever been on time for anything?
Yeah, but this is
since he's
United
been
Nations.
president?
There's like everybody from around the world down so he can ask his questions.
Don't drive, Mike.
I'm not going to drive.
There's very bad traffic.
Now he's a flyer to Washington, whereas I'm a seller person to Washington. Whereas when I go to Boston, I will fly, not train.
And I train.
See, totally
you go.
opposites. Go figure. Michael, you're going to head down to Washington, D.C. What do you expect here from our Federal Reserve this week?
It's another, as almost always, another watch what they say, not what they do. The markets have priced out any chance of a rate increase this week, but there's still that dot hanging out there that the Fed gave us in June for another rate increase. So we'll look to see what they say about that. If they keep the dot in the dot plot, because we get a new dot plot, and then we get a new series of their economic projections. And the thing to watch there will be the PCE inflation forecasts, because if they lower their forecasts from what they thought would be the case in 2023 and 24, then that would suggest that they think they're pretty close to done. If they leave them the same or they raise them, it leaves some uncertainty about what they may do going forward.
In terms of the SEP, wait, what's that stand for? Something in economic projections?
Summary of economic projections.
Summary of economic projections. What do we expect to hear from them? Any changes? Because I think they expected inflation at 3.9% for the core?
There will be changes because just the numbers have come in differently than they expected, at least for 2023, yes. They were looking at 3.9 and we're below that right now. They were looking at a growth rate of 0.5%. And right now, depending on what happens in the fourth quarter, we're looking at anywhere between 1% and 2%. So they could definitely change those. The unemployment rate will be interesting because they predicted 4.1% by the end of the year, where we were at 3.5 forever. Now we jumped up to 3.7. Is that close enough for them to keep it the way they are? If they lower the unemployment rate, that suggests that they see stronger growth continuing into 2024. But it will all depend on a long list of things that they cannot know the answer to right now, chief among them oil prices.
By the way, as an aside on that, I was thinking, they look at the core, we look at the core because energy and food prices are transitory. That's something we've been saying long before Jay Powell made transitory a dirty word. Does he, in the press conference, does he avoid using that word just because he doesn't want anyone to think about it?
I think he does, although someone not long ago coined the phrase transitory for the idea of the Fed's policy of going up, transitory interest rates, because the Fed may turn out to be right. It just took longer to get there.
Right.
All right, so what do you think some of the questions will be here? I mean, is there anything that a smart questioner might have in his or her back pocket for this Federal Reserve?
You're obviously asking the wrong person there. I mean, we've
been collecting them all morning. Mike's been collecting them. Talked to Bob Michael this morning.
Yeah, well, Bob usually always on the open. He gives me the question I should be asking. I don't always ask that question, but people want to know what the Fed is thinking about inflation in terms of at what point is it good enough. If they're looking for a move towards 2%, what does that mean? Below 3%? Because inflation can bounce around, as we saw with the CPI and with oil prices coming into this as an issue. Suppose oil prices go to $100, gasoline goes to $5 a gallon, and that takes us up into November or something like that. The Fed makes plans to raise interest rates, and then we see gas prices fall off and oil prices fall off for one reason or another, then they're kind of stuck. So the markets would really like to know what the Fed is going to be looking at. I don't think they're going to get an answer.
You know, I got this trader that I message with all the time. I think he messaged you as well, Anthony Santos Stefano from Cabrera Capital Markets. He asks a question which, well, in the headline of his question, I wondered the same thing. What's the trigger to cut? Now, he gets a little bit more specific and says, does the Fed watch corporate credit spreads?
Oh, looks like we have President Biden. Now we're going to go right down the street to the UN General Assembly to hear from U.S. President Biden. Let's go over to the comments right now.
About a week ago, I stood on the other side of the world, in Vietnam, on soil once bloody with war. And I met a small group of veterans, Americans and Vietnamese, who witnessed, and I watched the exchange of personal artifacts from that war, identification cards and a diary. It was deeply moving to see the reaction of the Vietnamese and American soldiers. Culmination of 50 years of hard work on both sides to address the painful legacies of war and to choose to work together toward peace and a better future. Nothing about that journey was inevitable. For decades, it would have been unthinkable for an American president to stand in Hanoi alongside a Vietnamese leader and announce a mutual commitment to the highest level of country's partnership. But it's a powerful reminder that our history need not dictate our future. With the concerted leadership and careful effort, adversaries can become partners. Overwhelming challenges can be resolved, and deep wounds can heal. So let us never forget that. When we choose to stand together and recognize the common hopes that bind all humanity, we hold our hands the power to bend that arc of history. My fellow leaders, we gather once more at an inflection point in world history, with the eyes of the world upon all of you, all of us. As President of the United States, I understand the duty my country has to lead in this critical moment, to work with countries in every region, linking them in common cause, to join together with partners who share a common vision of the future of the world, where our children do not go hungry and everyone has access to quality health care, where workers are empowered and our environment is protected, where entrepreneurs and innovators everywhere can access opportunity everywhere, where conflicts are resolved peacefully and countries can chart their own course. The United States seeks a more secure, more prosperous, more equitable world for all people, because we know our future is bound to yours. Let me repeat that again. We know our future is bound to yours. And no nation can meet the challenges of today alone. The generations that preceded us organized this body, the United Nations, and built international financial institutions and multilateral and regional bodies to help take on the challenges of their time. It wasn't always perfect. But working together, the world made some remarkable and undeniable progress that improved the lives of all people. We avoided the renewal of global conflict while lifting more than 1 billion people out of extreme poverty. We together expanded access to education for millions of children. We saved tens of millions of lives that would have otherwise been lost to preventable and treatable diseases like measles, malaria, tuberculosis. HIV/AIDS infections and deaths plummeted, in no small part because of PEPFAR's work in more than 55 countries, saving more than 25 million lives. It's a profound testament to what we can achieve when we act together, when we take on tough challenges, and an admonition for all of us to urgently accelerate our progress. so that no one's left behind, because too many people are being left behind. The institutions we built together at the end of the Second World War are an enduring bedrock of our progress. And the United States is committed to sustaining them. And this year, we're proud to rejoin UNESCO. We also recognize that to meet the new challenges of our decades-old institutions and approaches, they must be updated to keep peace with the world. We have to bring in more leadership and capability that exists everywhere, especially from regions that have not always been fully included. We have to grapple with the challenges that are more connected and more complex. And we have to make sure we're delivering for people everywhere, not just somewhere, everywhere. Simply put, the 21st century results are badly needed. They're needed to move us along. That starts with the United Nations, starts right here in this room. In my address to this body last year, I announced the United States will support expanding the Security Council, increasing the number of permanent and non-permanent members. The United States has undertaken serious consultation with many member states. We'll continue to do our part to push more reform efforts forward, look for points of common ground, and make progress in the year ahead. We need to be able to break the gridlock that too often stymies progress and blocks consensus on the Council. We need more voices, more perspectives at the table. The United Nations must continue to preserve peace, prevent conflict, and alleviate human suffering. And we embrace nations stepping up to lead new ways and to seek new breakthroughs on hard issues. For example, on Haiti, the Caribbean community is facilitating the dialogue among Haitian society. I thank President Ruto of Kenya, I thank him for his willingness to serve as the lead nation of a UN-backed security support mission. I call on the Security Council to authorize this mission now. The people of Haiti cannot wait much longer. The United States is working across the board to make global institutions more responsive, more effective, and more inclusive. For example, we've taken significant steps to reform and scale up the World Bank, expanding its financing to low and middle-income countries so it can help boost progress toward meeting the Sustainable Development Goals and better address interconnected challenges like climate change and fragility. Under the new president of the World Bank, change is already taking root. Last month, I asked the United States Congress for additional funds to expand World Bank financing by $25 billion. And at the G20, we rallied the major economies of the world to mobilize even more funding. Collectively, we can deliver a transformational boost to World Bank lending. And because the multilateral development banks are among the best tools we have for mobilizing transparent, high-quality investment in developing countries, reforming these institutions can be a game changer. Similarly, we proposed making sure developing countries have a strong voice and representation at the International Monetary Fund. We're going to continue our efforts to reform the World Trade Organization, preserve competition, openness, transparency, and the rule of law, while at the same time equipping it to better tackle modern-day imperatives like driving the clean energy transition, protecting workers, promoting inclusive and sustainable growth. And this month, we strengthened the G20 as a vital forum, welcoming the African Union as a permanent member. By upgrading and strengthening our institutions, that's only half of the picture. We must also forge new partnerships, confront new challenges. Emerging technologies such as artificial intelligence hold both enormous potential and enormous peril. We need to be sure they are used as tools of opportunity, not as weapons of oppression. Together with leaders around the world, The United States is working to strengthen rules and policies so AI technologies are safe before they're released to the public. To make sure we govern this technology, not the other way around, having it govern us. And I'm committed to working through this institution and other international bodies and directly with leaders around the world, including our competitors, to ensure we harness the power of artificial intelligence for good while protecting our citizens from its most profound risk. It's going to take all of us. I've been working on this for a while, as many of you have. It's going to take all of us to get this right. In every region of the world, the United States is mobilizing strong alliances, versatile partnerships, common purpose, collective action to bring new approaches to our shared challenges. Here in the Western Hemisphere, we united 21 nations in support of the Los Angeles Declaration on Migration and Protection, launching a region-wide approach to a region-wide challenge to better uphold laws and protect the rights of migrants. In the Indo-Pacific, we've elevated our Quad partnership with India, Japan, and Australia to deliver concrete progress for the people of the region on everything from vaccines to maritime security. Just yesterday, after 2 consultations in diplomacy, the United States brought together dozens of nations across 4 continents to establish a new partnership for Atlantic cooperation so that the coastal Atlantic countries can better cooperate on science, technology, environmental protection, and sustainable economic development. We brought together nearly 100 countries in a global coalition to counter fentanyl and synthetic drugs to reduce the human cost of this affliction, and it is real. And as the nature of the terrorist threats evolve and the geography expands to new places, we're working with our partners to bring capabilities to bear to disrupt plotting, degrade networks, and protect all of our people. Additionally, we convened the Summit for Democracy to strengthen democratic institutions, root out corruption, and reject political violence. And in this moment where democratically elected governments have been toppled in quick succession in West and Central Africa, we're reminded that this work is as urgent and important as ever. We stand with the African Union and ECOWAS and other regional bodies to support constitutional rule. We will not retreat from the values that make us strong. We will defend democracy, our best tool to meet the challenges we face around the world. And we're working to show how democracy can deliver in ways that matter to people's lives. The Partnership for Global Infrastructure and Investment addresses the enormous need and opportunity for infrastructure investment in low and middle income countries, particularly in Africa, Latin America, and Southeast Asia. Through strategic, targeted public investments, we can unlock enormous amounts of private sector financing. The G7 has pledged to work with parties to collectively mobilize $600 billion in infrastructure financing by 2027. The United States has already mobilized more than $30 billion to date. We're creating a race to the top with projects that have high standards for workers, the environment, and intellectual property while avoiding the trap of unsustainable debt. We're focusing on economic corridors that will maximize the impact of our collective investment and deliver consequential results across multiple countries and multiple sectors. For example, the Libido Corridor will extend across Africa from the western port of Angola to the DRC to Zambia, boosting regional connectivity and strengthening commerce and food security in Africa. Similarly, the groundbreaking effort we announced at the G20 to connect India to Europe through the UAE, Saudi Arabia, Jordan, and Israel will spur opportunities and investment across 2 continents. This is part of our effort to build a more sustainable, integrated Middle East. It demonstrates how Israel's greater normalization and economic connection with its neighbors is delivering positive and practical impacts, even as we continue to work tirelessly to support a just and lasting peace between the Israelis and Palestinians, 2 states for 2 people. Now, let me be clear. None of these partnerships are about containing any country. They're about a positive vision for our shared future. When it comes to China, I want to be clear and consistent. We seek to responsibly manage the competition between our countries so it does not tip into conflict. I've said we are for de-risking, not decoupling with China. We will push back on aggression and intimidation and defend the rules of the road, from freedom of navigation to overflight to level economic playing field that have helped safeguard security and prosperity for decades. But we also stand ready to work together with China on issues where progress hinges on our common efforts. Nowhere is that more critical than accelerating the climate crisis, than the accelerating climate crisis. We see it everywhere. Record-breaking heat waves in the United States and China, wildfires ravaging North America and Southern Europe, a 5th year of drought in the Horn of Africa, tragic flooding in Libya. My heart goes out to the people of Libya. That's killed thousands of people. Together, these snapshots tell an urgent story of what awaits us if we fail to reduce our dependence on fossil fuels and begin to climate-proof the world. For one day, my administration, the United States, has treated this crisis as an existential threat from the moment we took office, not only for us, but for all of humanity. Last year, I signed into law in the United States the largest investment ever anywhere in the history of the world to combat the climate crisis and help move the global economy toward a clean energy future. We're also working with the Congress to quadruple our climate financing to help developing countries reach their climate goals and adapt to climate impacts. And this year, the world's on track to meet the climate finance pledge that made under the Paris Agreement, $100 billion to raise collectively. But we need more investment from public and private sector alike, especially in places that have contributed so little to global emissions, but face some of the worst effects of climate change, like the Pacific Islands. The United States is working directly with the Pacific Island Forum to help these nations adapt, build resilience to the climate impacts, even as we lead the effort to build innovative new partnerships that attack the global challenges from all sides. From the First Movers Coalition, which is mobilizing billions of private sector community and the private sector commitments, to creating a market demand for green products in carbon-intense sectors like concrete, shipping, aviation, and trucking, to the Agricultural Innovation Mission for Climate, which is bringing farmers into the climate solution and making our food supply more resilient to climate shocks, and the Global Methane Pledge, now endorsed by more than 150 countries, which expands our focus beyond our carbon emission targets to reduce the potential greenhouse gases in our atmosphere by 30% in this decade. It's all within our capacity. We need to bring the same commitment and urgency and ambition as we work together to meet the Sustainable Development Goals of 2030. These goals were adopted at the United Nations in 2015 as a roadmap for improving lives around the world. But the hard truth is, for decades of progress, the world has lost ground these past years in the wake of COVID-19, conflicts, and other crises. The United States is committing to doing its part to get us back on track. All told, in the first 2 years of my administration, the United States has invested more than $100 billion to drive development progress in bolstering food security, expanding access to education worldwide, strengthening healthcare systems, and fighting disease. And we've helped mobilize billions more in the private sector investments. But to accelerate our forward progress on the Sustainable Development Goals, we all have to do more. We need to build new partnerships that change the way we tackle this challenge, to to unlock trillions of additional financing for development, drawing on all sources. We need to fill the gaps and address the failures of our existing system exposed by the pandemic. We need to ensure that women and girls benefit fully from our progress. We must also do more to grapple with the debt that holds back so many low and middle-income countries. When nations are forced to service unsustainable debt payments over the needs of their own people, it makes it harder for them to invest in their own futures. And as we work together to recover from global shocks, the United States will also continue to be the largest single country donor of humanitarian assistance at this moment of unparalleled need in the world. Folks, cooperation, partnership, these are the keys to progress on the challenges that affect us all, and the baseline for responsible global leadership. We don't need to agree on everything to keep moving forward on issues like arms control, a cornerstone of international security. After more than 50 years of progress under the Non-Proliferation Treaty, Russia is shredding long-standing arms control agreements, including announcing the suspension of the New START and withdrawing from the Conventional Forces in Europe Treaty. I view it as irresponsible and makes the entire world less safe. The United States is going to continue to pursue good faith efforts to reduce the threat of weapons of mass destruction and lead by example, no matter what else is happening in the world. This year, we safely destroyed at least the last chemical munitions in the U.S. stockpile, fulfilling our commitment toward a world free of chemical weapons. And we condemn the DPRK's continued violation of UN Security Council resolutions, but we are committed to diplomacy that will bring about the denuclearization of the Korean Peninsula. We're working with our partners to address Iran's destabilizing activities that threaten regional and global security, and remain steadfast in our commitment that Iran must never acquire a nuclear weapon. Now, even as we evolve our institutions and drive creative new partnerships, let me be clear. Certain principles of our international system are sacrosanct. Sovereignty, territorial integrity, human rights. These are the core tenets of the UN Charter, the pillars for peaceful relations among nations, without which we cannot achieve any of our goals. That has not changed, and that must not change. Yet, for the second year in a row, this gathering, dedicated to peaceful resolution of conflicts, is darkened by the shadow of war. An illegal war of conquest brought without provocation by Russia against its neighbor Ukraine. Like every nation in the world, the United States wants this war to end. No nation wants this war to end more than Ukraine. And we strongly support Ukraine in its efforts to bring about a diplomatic resolution that delivers just and lasting peace. But Russia alone bears responsibility for this war. Russia alone has the power to end this war immediately. And it's Russia alone that stands in the way of peace, because Russia's price for peace is Ukraine's capitulation, Ukraine's territory, and Ukraine's children. Russia believes that the world will grow weary and allow it to brutalize Ukraine without consequence. But I ask you this: if we abandon the core principles of the United States to appease an aggressor, can any member state in this body feel confident that they are protected? If we allow Ukraine to be carved up, is the independence of any nation secure? I'd respectfully suggest the answer is no. We have to stand up to this naked aggression today and deter other would-be aggressors tomorrow. That's why the United States, together with our allies and partners around the world, will continue to stand with the brave people of Ukraine as they defend their sovereignty and territorial integrity and their freedom. It's not only an investment in Ukraine's future, but in the future, every country that seeks a world governed by basic rules that apply equally to all nations and uphold the rights of every nation, no matter how big or small. Sovereignty, territorial integrity, they are the fixed foundations of this noble body. And universal human rights is this North Star. We cannot sacrifice either. 75 years ago, Universal Declaration of Human Rights captured a remarkable act of collective hope. And I say that again, collective hope. Drafted by a committee representing different regions, faiths, philosophies, and adopted by the entire General Assembly. The rights contained in the Declaration are elemental and enduring. And while we still struggle to uphold equal and inalienable rights of all, they remain ever steady and ever true. We cannot turn away from abuses, whether in Xinjiang, Tehran, Darfur, or anywhere else. We have to continue working to ensure that women and girls enjoy equal rights and equal participation in their societies. That indigenous groups, racial, ethnic, religious minorities, people with disabilities do not have their potential stifled by systemic discrimination. That the LGBTQI plus people are not prosecuted or targeted with violence because of who they are. These rights are part of our shared humanity. They're absent. When they're absent anywhere, their loss is felt everywhere. They are essential to the advancement of human progress that brings us together. My fellow leaders, let me close with this. At this inflection point in history, we're going to be judged by whether or not we live up to the promises we made to ourselves, to each other, to the most vulnerable, and to all those who will inherit the world we create, because that's what we're doing. Will we find within ourselves the courage to do what must be done, to preserve the planet, to protect human dignity, to provide opportunity for people everywhere, and to defend the tenets of the United Nations? There can only be one answer to that question. We must, and we will. The road ahead is long and difficult, but if we persevere, and prevail, if we keep the faith in ourselves and show what's possible, let's do this work together. Let's deliver progress for everyone. Let's bend the arc of history for the good of the world, because it's in our power to do it. Thank you for listening. You're kind.
All right, that was President Joseph Biden speaking at the United Nations, giving his address there. Obviously focusing a lot on what is happening in Ukraine. And then we're showing pictures of President Zelensky in the audience as well. So first of the many speeches from the United Nations down in Midtown Manhattan. Let's get a reset right now. We'll go to John Tucker and get a Bloomberg Business Flash.
Well, we're lower. The S&P 500 extending its September decline. 10 of the 11 major industry groups lower right now. The NASDAQ 100 underperforming, being dragged lower by declines in Amazon, Microsoft, NVIDIA, and Apple. And as we wait for a decision from the FOMC, the Fed, tomorrow, the 10-year Treasury yield hovering very close to August's high. And then you have the international benchmark for oil, Brent, topping $95 a barrel for the first time since November. And, of course, that adds to concerns about inflation. Still, conditions may be in place for stocks to move higher. At least that's according to Max Kentner at HSBC.
If you look at Q4 US growth expectations, it's sort of zero. Q1 next year is also close to zero. So the bar to beat is relatively low. So if you get yields moving higher, that's probably in response to growth doing better, so you buy equities.
Right now, the S&P 500, 25 points lower. That's down 0.6%. 44 at 27 on the index. The Dow down 209 points. NASDAQ 100, 135 points lower. That's down 0.9%. Waiting for the first trade. Instacart indicated to open at around $39, 30% above its initial public offering price of $30. So Bailey Lipschultz tells us that implies a strong opening for the deal that priced at the top of the marketed range that was already boosted. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, also streaming live on YouTube. So go over to youtube.com and search Bloomberg Radio. Let's check in with Joe Matthew, host of Sound On. He's down in Washington, D.C. Joe, thanks so much for joining us here. Just love to get your thoughts here on what we've just heard from President Biden at the United Nations.
Yeah, it's good to be the president, especially when a lot of people don't show up. We're hearing references to president of the world as he addresses this body without Vladimir Putin, without President Xi, without Macron, without Sunak. I could keep going on here. And the idea is to capitalize on this opportunity before you head back to Washington with President Zelensky essentially in tow to make the case for continued funding for the war in Ukraine, because you both know this has become a very difficult conversation in Washington. We're hearing not another dollar from certain members of the Freedom Caucus in the House. Republicans don't seem to agree on this, and the president's got some work to do.
Well, and the president, can he really make the argument that he's going to stand with Ukraine no matter what after abandoning Afghanistan right at the beginning of his term?
Well, my goodness, that's a loaded question, and I'm sure he would disagree vehemently with the way you just characterized that.
But he's talking about the defense of human rights and guaranteeing women and girls the rights that they're due. Mm-hmm. And we left them in Afghanistan after, what was it, a 20-year conflict? That's going to be a difficult sell for him. Isn't that one of the weakest points for him in this upcoming election?
It's a weak spot for Republicans, certainly, who want to remind us of the way the withdrawal went here. The Biden administration would like to talk about how many people were evacuated successfully and how the longest war in American history was finally brought to an end under his watch. So, look, if you ask them that question, you're going to get one answer. If you talk to a conservative Republican in the House or the Senate, you're going to get a very different answer on that. I'm not sure Ukraine is hinging, though, on the way people look at Afghanistan. This is becoming a, why don't you help the people in Hawaii before you help the people in Kyiv kind of a conversation that we're hearing in the budget debate in Washington. Whether you see it that way or not, that's kind of what the White House is facing here.
Joe, what do you think President Zelensky can actually get done down in Washington?
It's a great question. You remember, it was, by the way, end of last year. It was like about 4 days before Christmas when he spoke before a joint session of Congress. And I remember going up there that night for our coverage on Bloomberg. Every light post on Pennsylvania Avenue had an American flag and a Ukrainian flag on it. There was just this feeling of peak support. And there were a few dissenters like Lauren Boebert and Marjorie Taylor Greene who recorded videos that night saying they were not convinced. But for the most part, Washington was totally behind it. It feels very different this time. And the question is, what happens when you're in person? He's going to, of course, go to the White House, but more importantly, he's going to be meeting with Senate leadership, Republican leadership in the House, Speaker McCarthy. And those are the people who are going to really have to make the case to their rank and file if they want to keep supporting this. Mitch McConnell is very much behind this effort. Senate Republicans tend to be. It's really in the House where you start to run into the disagreement.
Do you think he'll get an audience with some of those House members that are maybe more forceful in their policy that they don't want to extend any more aid?
I'm sure he'd like to. We spoke with Senator Ted Cruz last night, who has different ideas about this. He does believe Ukraine needs to beat Russia. Whether or not we're funding this entire thing the way we are is another matter, but he expects to sit down with him and talk, and I'm sure that President Zelensky will talk with anybody. He'll sit down with him, and that's kind of the situation he's in, because he knows at some point this window is going to close, guys. We're going to be talking about a second anniversary at some point. Where's the fatigue going to be at that point?
On another issue, when you spoke with Senator Cruz, he said the Biden administration thinks it's in its best interest to have a government shutdown. Interestingly, Kevin McCarthy thinks the very same thing, that it's in the Biden administration's interest to have a government shutdown. What are you hearing from others?
Well, this is like the 3D chess part, right? I mean, they mean that politically in that there's going to be a blame game at some point after the fact, and Speaker McCarthy realizes he's in charge of the House, and he probably will get the blame if this thing shuts down. We thought we had a deal back in the middle of the summer before people went away for August recess. Remember the debt ceiling deal? We labored over this whole idea, counting down to a potential default that didn't happen. It's like that never took place. We're back to the drawing board on this. So Speaker McCarthy is in a more, probably, I would say, politically vulnerable position than Joe Biden is. But I've got to tell you, there still appears to be no path. Republicans on the Budget Committee are going to come out with their budget at noon today. We're going to talk with the ranking member, by the way, on Sound On at 1 o'clock, Brendan Boyle, the Democrat, who probably wouldn't vote for that if his life depended on it. And then, look, we're going to be out of money at the end of this month. I don't have to go through all the motions here for you guys. You know how this works. But it does not appear that Kevin McCarthy has the votes for a continuing resolution right now. Here's the irony, by the way. If they don't get it done, because of that debt ceiling deal, if they don't get it done by the end of the fiscal year, there's an across-the-board 1% cut. That might be a motivator, but we'll have to see what lawmakers think about that at the end of the month.
All right, Joe, thanks so much. We really appreciate getting your time. Lots going on down in Washington, D.C. That's Joe Matthew, host of Sound On. So we appreciate getting some time here. Let's switch gears here. Let's talk about the global energy. We've been calling out the price of WTI crude oil, for the last several months as it's moved off of its low. And it's now up another 1.4% today for WTI crude, just under $93 a barrel. And it's getting a lot of people, as it does, when we see big moves talking about alternatives to oil. One of those is nuclear. Seth Gray joins us. He's a president and chief executive officer of Lightbridge Corporation. That's a NASDAQ-traded company. LTBR is a ticker to put in there. Seth, thanks so much for joining us here in our Bloomberg Interactive Broker Studio. What is Lightbridge Corporation? What do you guys do? What's your strategy?
Look, our main activities are we are designing advanced fuels that will work in the existing reactors as well as the new coming small ones.
And we're talking nuclear
fuel. So fuel you put inside the reactors won't work without it. But this is a reimagined, for the first time, new, better fuel for the reactors. We're partnering with Idaho National Laboratory to develop and test it. And this will improve the safety of the reactors and the economics of the reactors dramatically, as well as the non-proliferation, and can allow reactors to load follow with renewables on a zero-carbon grid.
How safe can they be? I just got finished watching Chernobyl, which is terrifying. And I know I'm one of the last people to watch it. But before that, I watched Inside Bill Gates' Brain. And I thought it was really a fantastic sell for the nuclear industry. He seems to have found a very safe solution to creating nuclear energy.
Right. What's happening now is companies like TerraPower, that Bill Gates is the chairman of, and Lightbridge, our company, are developing newer, much safer technologies that literally physically cannot have an accident like Chernobyl. These are very different, extremely safer technologies. The Lightbridge fuel runs 1,000 degrees Celsius cooler in reactors than the current fuel, and actually will produce more power while doing it, and just extremely safe.
Seth, reset kind of the world energy grid for us. Where is nuclear power today in the U.S. and then maybe in other parts of the world? Is it on the ascendancy, or is it still facing a lot of headwinds?
It's on the ascendancy. The polling in most countries shows nuclear has about 2/3 favorable or strongly favorable support, and the people who work in nuclear don't believe that. And that we're seeing new nuclear reactors being finished in Georgia in the United States, ordered in many countries. We're seeing rapid development of these small reactors, advanced fuel, like what Lightbridge is doing. And it's partly for climate reasons, but I think the stronger driver right now is energy security. Countries that either want to get off relying on Putin's fossil fuels, or it turns out whoever supplies them with fossil fuels, they tend not to trust. And being able to get off that is a good thing. And, you just mentioned the 1%, increase in oil prices that will translate to about 1% price increase in a lot of expenses, including gasoline. That doesn't happen in nuclear. It's very level pricing. A 1% increase in uranium price would result in a tiny, tiny fraction of 1% of increase in a nuclear power price.
But it's the startup costs that are what terrifies everyone, right?
Yes and no.
In terms of the finances.
If you're building one or two, yes. If you're building 4, by the time you get to the third one, those issues are done. The United States built over 100 large reactors, most of them on schedule, on budget. The United Arab Emirates just built 4, pretty much on schedule, on budget. China is, Russia is, France built almost 60 of them on schedule, on budget. So yes, it's like building a bridge. If it's a one-of-a-kind thing, the engineering, the complex construction can go over. But you build several of them, that's not the case. And with these small reactors, where much of them will be factory built, you could build them like 737s, very large numbers, and really know the timeframes and costs.
Talk to us about those smaller reactors. I guess I've heard about them just over the last several years. Tell them, what are they, how are they different, and what's kind of their purpose?
Well, right now, the typical nuclear reactor is 1,000 megawatts electric power. Small reactors under the U.S. government definition are 300 megawatts or smaller, and some go way smaller than that. So say less than a third the size of the current reactors to even much smaller than that. So first of all, you could get them small enough that you could have dedicated power to critical facilities like military bases, data centers, oil refineries, et cetera. So if someone shuts down the electric grid, you don't lose the military base, et cetera. Another factor is that because so much of them are factory built and shipped to the site, you have very good quality control, can build them much cheaper, much faster, and they're just using more advanced, more modern technology on safety, so that even with situations like you've seen where a reactor will lose coolant water, that kind of thing, these reactors could not harm anybody. Literally, it looks like even if they lived across the street from the plant.
Are we building them in the U.S. now?
We are going to soon. NuScale is working with Idaho National Laboratory to deploy one at Idaho National Laboratory. The company you mentioned, TerraPower, with Bill Gates, is looking at deploying at least one in Wyoming. X-Energy is looking at deploying in Texas to power Dow chemical plants, and there are several others that are looking at near term, and probably the first will actually be nearby, GE Hitachi deploying one at Ontario Power Generation in Canada.
Okay. So I know the Nuclear Energy Policy Summit is in New York this week. What's the #1 issue?
Yeah, and I was pleased to speak there yesterday, and the #1 issue there, I'd say, ostensibly is climate change, and that's what John Kerry spoke about in his keynote yesterday as part of Climate Week. But with President Zelensky about to arrive here in New York and speak at some events here too, I think energy security is really dominating, and we're hearing more and more about that at the conference too, not just climate.
I wonder when everybody started adding a second U to the word nuclear. Have you noticed that?
Yeah.
Even George Bush says nuclear.
Yeah.
Where's that come from?
Well, I think it came from George Bush originally, but it kind of stuck. So it's an American thing. I don't hear that in other countries.
All right, Seth, thanks so much for joining us. Seth Gray, President and Chief Executive Officer of Lightbridge Corporation. LTBR is the ticker to load into your Bloomberg terminal. And we'll have some more coming up. S&P 500 off 0.7%. We'll keep an eye on these markets. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
right, coming up in this hour, we're going to check in with Jonathan Maxwell, CEO at Sustainable Development Capital. He's going to join us to discuss the outlook for oil and the renewable energy market amid rising gas prices. Pat Gallagher is also going to join us. He's the CEO of Gallagher Insurance. Joins the program to talk about risk mitigation. And then we're going to check in with Joe Mysak. No, it is not Friday, so we're not talking municipal bonds, but he's got a great story in Business Week here talking about Bonfire of the Vanities.
Oh, yeah.
What could that be about?
I read that. Fantastic.
I know. That's it. So Joe Mysak will be joining us here. But first, let's kick things off with John Tucker.
All right. As investors wait for a decision on rates from the Federal Reserve, they're latched on to higher rates for the narrative right now. That's sent 10-year Treasury yields to multi-year highs. Not good for risk assets, especially technology shares. Tech leading the stock losses right now. Crude has soared by about a third since mid-June, and Jennifer McCowan at Capital Economics says it is a potential headache for the Federal Reserve policymakers as they open their two-day meeting.
The real concern, I think, is that this feeds into inflation expectations and starts back off kind of a wage price spiral that we hoped was gone in the US and was fading.
We expect the first trade this afternoon. Instacart indicated opened up $39 today. That would be 30% above its initial public offering price of $30. S&P 500 right now down 29 points. That's down 0.7% at 44.23. Dow Jones Industrial Average down 236 points. That's down 0.7%. The NASDAQ 100 is down 147 points. That is down 1%. Two-year yield, right now it's 5.07%, so that's 2 basis points higher. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. All I wanted to know was, what is the new fuel?
Yeah.
The fissionable material.
And?
But I got my answer. It was metallic-based. So that's kind of interesting.
Okay.
But is that what? So it's metal?
Yeah, it's oxidized in a different way, so
safer, presumably.
Safer with a higher yield.
There you go. That sounds better to me.
Which sounds perfect for if you're going to drive at some point in the future a nuclear Ford F-150.
Yes, that would be awesome. Transferring that tech from the sub to the pickup truck.
We're going to do more good. All right, John Tucker, thank you so much. Bloomberg Markets today brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Looking at these markets, as John was just reporting, S&P off about 0.7%, but there's lots of stuff going on underneath the hood. We've got some IPO action out there as well. We welcome Jess Menton. She covers all the markets for Bloomberg News, and she joins us here in our Bloomberg Interactive Broker Studio. Jess, what are you looking at?
Well, I did write a story at the close yesterday where I was taking a look. Of course, how I always do. But I wanted to point out, so it was actually, and I mentioned this to Paul earlier, 100 trading sessions, consecutive trading sessions since the last time the S&P 500 had a decline of at least 1.5%. So it actually went up until August without a 1% decline. So there's been 4 times since the S&P 500 peaked in late July where there's been at least a 1% decline, one of those including last Friday, but there still has not been a decline of at least 1.5% for, if it goes again today, that would be 101 trading sessions. That's the longest streak since 2018. And a lot of that obviously has to do with what investors were already positioning as far as what their expectations are with the Federal Reserve. But it will be interesting as we do continue to see Brent crude topping $95 a barrel, what that kind of dynamic could mean. But if you're looking more broadly at the equity market today, though, you are seeing the S&P 500 down about 0.7%, but a little bit more pressure there when you are looking at the tech-heavy NASDAQ composite. I was also looking at client flow data from Bank of America. So this is specifically to their clients and their positioning. So their clients bought stocks in 6 of the 11 sectors in the past week. That was actually led by financials. So those actually saw the biggest inflows since April. And that's something that I've been tracking for a while. And I had mentioned this to y'all in recent weeks where I talked to Jill Carey Hall at Bank of America, who is the one compiling this data. And a lot of that, when you're talking about financials, it's actually geared more toward what mutual funds and how they are positioning. And more specifically, if you're looking at more of the fintech kind of credit card issuer names, and less so when you're talking about banks and regional banks. And
mutual funds keep adding.
Right. Yeah, and they had been
MMFA index to see that total, and it's well over $5 trillion.
Exactly. Exactly, and they had just been so underpositioned, and also we had the changes in those sectors back in the spring in the S&P 500. So those credit card issuers and the fintech names actually used to be housed in the technology sector. Now they're in the financial sector. So you typically, if you break down financials, you have obviously the banks, the regional banks, but you have these fintech names, the credit card issuers, and then obviously the insurance companies too.
So I look over the last 5 days in terms of sector movement, and financials have gained just a smidge.
Right.
Communication services also almost barely up, or just barely up. But utilities are blowing away everything else.
Yes, they are.
Right? As oil rises, who are the big beneficiaries of that?
Well, that typically, not surprisingly, would be when you're thinking about energy companies. So if you look at Valero month to date, that stock is up double digits, as well as Marathon Petroleum too. But when you think about who loses from that, a lot of the airline companies, in particular, if you look at the subgroup in the S&P 500, it actually had just entered a bear market in the last few trading sessions. So that's the caveat to that, where you kind of break down who would be the winners and the losers from that.
What are the airlines in? Are they in consumer discretion here, or
yes.
So the biggest losing group of the last week?
Exactly,
Yeah.
and so that's why it makes sense when you are seeing that decline in those industries. Nick Colas, I know that y'all follow him at the Data Trek pretty closely. He had a note to his clients this morning. He was taking a look at oil prices, when the dynamic when you're thinking about what it means for economic growth. He was saying that typically if you look back through history, usually oil prices usually double in a year or less before a recession would be inevitable. So he was thinking that the warning track would actually be a lot higher, around $140 a barrel. But
they're still up a third from June,
right? Exactly. So when you think about just in recent weeks, as too in the last 3 weeks as well, doubling there and up about a third in that kind of span. Still quite a bit of a move there. And then you put what's happening with yields, and then also the dollar. If you're looking at, we've talked a lot about that, whether you're looking at the dollar spot index or the DXY breaking above 103 actually coming into this month and still staying above that. So you have those kind of three dynamics that are, when you're explaining about, when we were talking about the kind of lack of move there and why we haven't seen 1.5% decline, the S&P 500 for so long, those are some of the dynamics that are there.
Lack of move down, right? Because we've seen
exactly
a move up.
We have.
Of greater magnitude.
We have. And so a lot of that is also dip buying. So LSEG Lipper data, they were crunching the numbers from U.S. exchange-traded equity funds data, and actually there's $13.4 billion in net inflows in the week through last Wednesday, so that's the 9th week of additions in the past 12. So clearly you're continuing to see that money flow into U.S. ETFs, even despite when we see mild declines there in the S&P 500.
One of the bankers going to get cart open here today. It's 11:08.
It is, and
Push
so
the
it
button.
looks like that. It pushed the button. It looks like it's going the indication around $39, and it was. And as JT mentioned earlier, it did price at $30. What's interesting about this particular company too is its main business involves really pairing consumers with those independent contractors, but also when you're thinking about this being the 4th largest IPO this year, on the back of what we saw just this past week.
The 4th largest and the 4th.
Yeah. And it is obviously when you're thinking about what's happening with some of its advertising business, it's supposed to be a higher margin operation. So that's something that investors have been watching pretty closely as far as what it means on the ad side of things as well.
All right, Jess Menton, thanks so much. We appreciate it. Jess Menton covers all the markets for us here in New York. Appreciate getting some thoughts there. It is United Nations General Assembly Week. It's also New York Climate Week. And just a moment ago, we were talking about nuclear. Did I say that correctly?
Yes.
Nuclear energy. Okay. But there's just a lot of folks out there doing some really good work about just alternative energies in general. One of them is Jonathan Maxwell. He's the CEO and co-founder of Sustainable Development Capital, and he has got a new book out. See, right here, got a new book out, The Edge: How Competition for Resources is Pushing the World and Its Climate to the Brink, and what we can do about it. Jonathan, thanks so much for joining us here on our Bloomberg Interactive Brokers studio. What's the big message for you when you're getting, you hear it's Climate Week in New York, it's United Nations General Assembly. I gotta think energy, given what's happening in the world, is front and center. What's the message you bring to your clients?
So, some people might say the clean energy transition or sustainability isn't going so well.
Okay.
Right? Most 82% of the world is still oil, gas, and coal in terms of its energy. So the message I bring is that not only do we need to figure out, which is the mainstream piece, how to get more clean energy into the system, but we've got to figure out how we can start wasting 2/3 to 3/4 of the energy in the system in the first place. So much of the gas and the oil
We've
is
talked
lost.
to you before, right?
Yeah, because the inefficiencies.
This one stuck
The
with me.
inefficiencies is your thing, right?
This is it.
Exactly.
Yes.
Inefficiency is my thing because the world wastes 75% of its energy, half of the food and a third of the water.
Is there a cool scientific term for energy that's wasted in use?
It's energy losses of primary energy waste. Some of the best work in the world is done here in the United States by the Lawrence Livermore National Laboratory. They run an energy flow chart. You show how much energy comes into the US economy, how much survives on the other side. You lose about 2/3 of the energy, and it's mostly heat. So you talked about nuclear power stations. It's great producing power from a nuke power plant, but if you're dumping the heat, then it's only operating at 38% efficiency. If you've got a gas turbine, which is driving electricity onto the grid, and it's dumping the heat, it's delivering 40 to 50% efficiency.
But at least the nuclear isn't creating a carbon footprint, right?
But yes, but you're wasting the heat. And so you
yes,
don't
but
need
I
as much.
understand. But the thing is, other energy sources create carbon dioxide, which contributes to global warming, right? As we are told. I don't care if nuclear dumps 95% of its energy as long as it doesn't contribute to global warming, right?
Yeah, so there are three things and one dimension additional to think about. So the first is carbon. That's a really important thing to solve for. The second is cost. How much does it actually cost, total life cycle? And actually saving energy is the cheapest possible way, especially if you're dumping 2/3 of it. The third is resilience and availability. And that brings us into the last point. Like how reliable. Nuclear is very reliable when you put it on the grid. It can run what they call baseload. But the problem is how long. So here's the last point, time. So we all talk about transitioning the energy system, but it's going to take decades and trillions of dollars, and we're going to do it. And that's what Janet Yellen is talking about tomorrow at the UN General Assembly, and we celebrate that. What I'm saying is, in the meantime, it's just as important, and it can be done, if not to waste the energy in the meantime. And that's what's happening
What is the most
today.
efficient source of energy for running our homes and businesses and cars?
So the most efficient source of energy for running cars is electricity. It's about 75% efficient compared to about 15 to 30%.
Well, but that electricity comes from many different sources of energy, right? It could come from nuclear, it could come from dirty coal.
So, most efficient way of generating energy for electricity is if you can use the heat as well as producing the electricity. So cogeneration using waste gases, natural gas even, but as long as you're using the heat. Nuclear, as long as you're using the heat.
So nuclear with a turbocharger, essentially.
Nuclear with a heat recovery system, and then using that heat. And then industry needs a tremendous amount of heat as well as power. And the last point I'd make is we always talk about energy as if it's electricity. Do you know how much of the world's energy is electricity? 20%.
Wow.
Wow.
What's the rest?
It's heat and transport fuel. So here we are in the United States. The United States loses 78% of the primary energy, in other words, the oil that goes into transport. That's
Someone told us yesterday, Paul, that the growth in demand for electricity over the last 20 years, or the growth in production, has been zero, which I thought was fascinating. I would have imagined it's exponentially larger.
Well, actually, do you know what's interesting? If you look at where electricity ends up, it ends up in the home, largely. So domestic, our homes are very significant users of energy. Business and industry, to some extent, almost nothing in transport yet, right? So if you then put everything into the energy system, the big piece is we've got a big problem with heat and transport. That's the piece that needs to be solved. 75% of all of this energy solution is addressable through making more efficient solutions for buildings, industry, and transport. Generate energy where you need it, so you don't waste the heat.
Now, when you say heat, are you talking about HVAC just in general?
I'm talking about HVAC, I'm talking about high-temperature process heat. I'm talking about
cooling as well.
Cooling, steel mills, cement plants, very high-temperature heat, cooling. There's more growth in demand for cooling by 2030 than the whole demand for energy in China and India put together. Data centers, massive, public buildings. In the country I come from my funny accent, for UK, 14% of the UK's energy is used by the public sector. The biggest part of it is the hospitals. And they use, again, as much heating and cooling as they do electricity, and they waste most of it.
What are some of the technologies that you've seen or that you're funding that go to this energy waste issue?
You need
Or
to
recovery.
solve, to solve-
Recovery.
Yeah,
Yes.
so recovering things that would otherwise be wasted. So you can generate natural gas even. You use your natural gas on site, but if you're on site, you can use the heat for power. Sorry, for heating. If you're taking a blast furnace, you can take, which we do, we take the waste gases from the blast furnace and recycle them into power and steam for steel mills. You can put solar on your rooftop, not just at home, but at massive scale in commercial industrial applications, and there's almost no transmission and distribution loss. And you can match your loads well if you pair it up with batteries. You can do heat efficiently by putting heat pumps in industrial applications. I've been doing this job for 15, 16 years of on-site energy generation. The biggest innovation I was dealing with 11, 12 years ago was the LED light bulb. All of a sudden, you could save 90% of the energy with an asset that worked 20 times longer. But on-site energy generation is a massive part of the solution. By the way, if we don't stop wasting all of this energy, I'm afraid there's no point making all the new stuff, however green it is, if we're just dumping the existing energy network down.
Well, don't tell anybody that. You know.
No, we have to do both.
Yeah,
we have to go as fast as possible in generating clean energy, and at the same time, but to the same level of effort and the same level of investment, we have to invest in efficiencies and improvement.
Is that happening? Is that happening?
It's just starting. I have to celebrate the United States on this one compared to my country at the moment. The United States, about 20% of the Inflation Reduction Act is designated for things I would broadly define as on-site generation or efficiency. The European Commission has a massive policy called Energy Efficiency First. That's because if you remember when Russia last invaded Ukraine, when they annexed Crimea, the Europeans came out and said, well, for every unit of gas we don't use is 2.5 we don't need to buy from Russia. So ever since then, although they mumbled it until last year, the European Commission have been quite serious about energy efficiency. It's now the #1 policy. The UK needs to get serious. Today, there is actually finally a message from the Chancellor looking at ways of addressing this. But this is the largest, fastest, cheapest source of greenhouse gas emissions, the biggest way of cutting costs in the economy, and the great news is I'm not here talking about begging for subsidies. I'm talking about getting something done that's good for business, good for the economy. Actually, I think it's the greatest economic opportunity that I know.
All right, Jonathan, great stuff. I knew, once you started talking, I know this guy. Jonathan Maxwell, CEO and co-founder of Sustainable Development Capital, also a publisher of The Edge, How Competition for Resources is Pushing the World in Its Climate. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Lawyers overseeing the bankruptcy of cryptocurrency exchange FTX are suing Sam Bankman-Fried's parents to recover millions of dollars in what they call fraudulently transferred and misappropriated funds. The lawsuit claims Joe Bankman and Barbara Fried benefited from the money at the expense of debtors and creditors. Bloomberg senior editor Dave Litka says it harkens back to another case.
You can look at the example of the Bernie Madoff situation where for years it went back to seek money that investors in this fund had held on to for years. The basic bottom line is that you can't hold on to money that you obtained illegally through a fraud.
Now, Sam Bankman-Fried will stand trial next month. Instacart begins trading on the NASDAQ today. The company set a price of $30 a share for its IPO, valuing it at $9.9 billion. Bloomberg's Shonali Bosick puts that figure into perspective.
It is about a fourth of where it was valued at the pandemic, post-pandemic peak when everyone was ordering online. But for the sake of its early investors, think Tiger Global, Co2, that have not had an exit in a very long time. You have Instacart now valued at that $9.9 billion, above that about $8 billion valuation it had in those earlier funding rounds when you saw Tiger and Co2 start to get in.
Now, Bloomberg reports it's expected to open at $39 a share. The strong data and advertising business of the grocery delivery company makes it even more appealing to investors. Advertising actually accounts for about 30% of Instacart's revenue. Those are the company's stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the S&P 500, all 11 the major industry groups are lower right now. That includes energy as well. Oil prices and bond yields, though, are higher ahead of the Federal Reserve's interest rate decision tomorrow. Now, the central bank is widely expected to leave its policy interest rates unchanged. What traders are worried about is the accompanying economic guidance about future interest rate policy. We did get some fresh data today. Housing starts falling 11.3% in August after a revised 2% gain for the month of July. Right now, the S&P 500, 29 points lower. That is down 0.7%. We're at 44.23 on the index. The Dow Jones Industrial Average right now down 245 points. That's a decline of 0.7%. The NASDAQ 100, 138 points lower. That is down 0.9%. Brent crude up $1.03, 95.44 right now for a barrel of the international benchmark. Brent crude NYMEX up $1.39, 92.87. And as far as yields, the 10-year yield 3 basis points higher. That's at 4.33, so that's a multi-year high there. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
John Tucker, thank you so much. We appreciate it. Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. It is Climate Week here in New York, and not surprisingly, climate change and natural disasters are really at the forefront of concerns among corporate executives, and we want to get a handle on that. So we check in with Pat Gallagher. He's the CEO of Gallagher Insurance. It is on the New York Stock Exchange, listed company. AJG is the ticker. It is a $50 billion market cap company. The stock's up 24.5% year to date. It's a 52-week high. And it's up 0.7% today. Pat, thanks so much for joining us here. I know you guys recently conducted a survey of 1,000 U.S. business owners to understand kind of how they're thinking about risk. What are some of the key takeaways you found?
Well, first of all, it is no surprise that the business owners are incredibly concerned about climate change and weather-related issues. And so when you think about what's happened just in the past week or two, with Lee coming up the East Coast, we kind of escaped a major hit, but those things continue to rack the business community. In fact, I think we estimate that first half natural causes, first half of the year, caused about $138 billion of losses. And if you're a business person, you know that's a lot of businesses being impacted. That's a lot of homes being impacted by natural disasters. So that really is one of the main concerns of business people. We interviewed about 1,000 clients, all of them privately owned. So this is not the professional risk management community. These are the people day in and day out that make a living by running businesses. And they are concerned about their risk management needs, which they should be.
I wonder if there's a difference. Well, they're concerned, but are they doing anything about it? Is there anything they can do about it?
Yes, there is, and that's, I think, a really good point. The fact is that there's a lot they can do about it, and risk management and the ability to counsel with them and to give them some advice is a huge part of what we're all about. Insurance is just really one piece of what we do for a client, and in fact, we start with that premise that insurance plays a role in your risk management, but your risk management is not just we buy insurance. And it should be, what can we do? Where do we locate plants? Where do we move trucks? How do we react when a storm is coming? What is our disaster recovery planning? We help on all of that. So when something happens that's really a major disaster, how do we get you back up in business as quickly as possible? Insurance plays a role in all of that, but it's not the be-all and end-all.
All right, so from the insurance perspective, I mean, it's interesting, Pat. I see a lot of companies relocating to. It seems like everybody's and their brothers going down to Florida, but boy, it'd be a tough place to base a business given all the challenges they're facing from, all the weather issues down there. What are you seeing when you talk to some of these smaller, mid-sized businesses about kind of how they really try to incorporate that into kind of their future?
Well, first of all, I think it's really important to note that not all the mid-sized businesses across America are moving to Florida, and they're not moving to Texas. They're in business because the communities they're in need them, whether they're construction companies or real estate owners, or whether they're food companies, whatever it is, they're in locations because there's business opportunities there. So first of all, you've got to start with the premise that not all companies either have the same exposures or the same way to mitigate those exposures. You have to really personalize this. And you have to sit down with a client and understand, where are they operating? What business is it in? We happen to be privileged to be very, very expert at about 30 to 50 areas of business. So take hotels, or take real estate, or religious and not-for-profit, or construction. In these areas, we really know that business. So we can sit down, and it's a different set of exposures for the person that has to be a contractor in Naples versus the person who's a contractor or real estate owner in Chicago. And these businesses are literally global, but they're across, the interviewed businesses were across the United States. And you start with saying, okay, what are your exposures? No two businesses are exactly the same, and no two business owners have the exact same appetite for risk. I'll give you an example. I can take a large auto dealer in the town that I live in, Glenview, Illinois, on one side of town, and have a large auto dealer on the other side of town owned by different families. Those families will have a different appetite for risk. How much of the lot exposure for hail does one want to take versus the other? And you have to sit down with the owner and say, all right, what is your personal balance sheet? What is your appetite? How do we mitigate that? What do you do when you see a storm coming? What is the coverage that you need to take care of that open lot? How much are you going to have out there? How much are you going to be able to move indoors, et cetera, et cetera? And that varies across industries, and it varies across geographies. And that's the starting point for someone like Gallagher, who then says at the end point, now let's buy this insurance to cover the things that you can't mitigate. And I think that's a really important function that a lot of people don't understand about the responsibility that the brokers have for their commercial clients.
By the way, in terms of Gallagher, can you keep premium increases across coverage, across geography, in line with inflation? I know we've been doing some stories about, for example, automotive insurance rising double digits every month for the past 12. So the inflation is there. But everywhere else, I mean, your cost to repair or replace is going to be higher with inflation. So do you see the increases in premiums as well? Do you have that pricing power?
Well, no, we don't have pricing power because, recall, we are brokers. We take no risk. So our job is to help that insured figure out, number one, how to mitigate their own risk, and then number two, how to properly buy insurance. And that means that in order to keep that pricing or to keep that cost at the level that it should, how much should they retain? How much of a deductible should they have? So let me put it in personal line standards. Do you want to take a $500 deductible on your personal lines or a $5,000 deductible? Well, different people will take different amounts, and that has a direct impact on the cost of your personal lines, whether it's your auto insurance or your homeowners. Same is true in business. So if you have the personal balance sheet to be able to take more risk, you can mitigate the cost of the premium that you're going to pay to a third party. And we're very, very good at that, whether it be putting together group captives, whether it be putting together self-insurance programs, or whether it simply be saying, look, the best place for you to get your insurance is this first dollar policy written by XYZ insurance company. But we don't actually have pricing power. Our job is to help that person who doesn't live day in and day out in the market get the best deal. And right now, you're absolutely right. The cost of insuring people is terrifically impacted by inflation.
And so is inflation, is the rates insurance companies can charge, is that relegated by the state? Is that regulated by the state, and so therefore you have to work with the state?
So it depends on the line of coverage, and it depends on the state. So in most states, personal lines, in particular automobile rates, are regulated.
Okay.
And you see a conflict going on right now that I think most of your listeners will be aware of in the state of California. A lot of companies have said, look, enough, we're not going to write here. And part of that is the loss picture, the wildfires and the threats that they have just in terms of those. But a lot of it also is simply saying, look, we have inflation. The cost to repair is significant. We need to file for rate increases. We need to base rate change in order to cover these costs. Where you have a political system that makes that difficult to do, you finally have a break point in California where some carriers have said, I just can't write anymore here. And that's a real problem politically. And it is on those lines of coverage that everybody has to buy. Now, when you leave that and you go to a commercial concern, then you do have some lines of coverage that are regulated, but you also have a pressure release valve we refer to as the excess and surplus market. And that allows insurance to be quoted on a free form, free to rate. So that allows me to sit with a commercial client and say, don't buy that from the regulated entity. Let me structure this for you differently.
Got it.
But so it's the answer to your question is yes, there's a heavy dose of regulation. It varies by geography. It varies by line of coverage.
All right, Pat. Great stuff as always. Pat Gallagher. He's the CEO of Gallagher Insurance. But that's a tough business for me to really understand. It always has been. But fortunately, there are people out there who kind of get it. Gallagher Insurance. It's a New York Stock Exchange listed company. AJG is the ticker symbol. You can load that in the Bloomberg terminal and get a look at that company. Right now, let's head down to Washington, D.C. We'll get rolled in national news with Nancy Lyons.
Thanks, Paul. President Biden is calling out Russia for its invasion of Ukraine and telling UN leaders no nation is secure if Ukraine's land is stolen.
If you allow Ukraine to be carved up, is the independence of any nation secure? I'd respectfully suggest the answer is no. We have to stand up to this naked aggression today and deter other would-be aggressors tomorrow.
Biden's message of unwavering support for Ukraine is playing out as Congress is increasingly divided over providing additional funding for Kyiv. Defense Secretary Lloyd Austin is drilling down on the specifics concerning Russia's invasion of Ukraine. He's been meeting with the Ukraine Defense Contact Group and offering an assessment of where things stand.
Ukraine's counteroffensive continues to make steady forward progress. And brave Ukrainian troops are breaking through the heavily fortified lines of Russia's army of aggression.
Austin says American-made Abrams battle tanks will arrive in Ukraine very soon. The F-35 fighter jet that disappeared over South Carolina Sunday has been found, ending an intense search. A debris field was located in Williamsburg County, South Carolina, northeast of the area that was initially targeted. A two-day pause in Marine air operations is now in effect so that leaders can discuss aviation safety matters. Recently, there have been two other mishaps, crashes of an FA-18 in California and an MV-22 Osprey in Australia. 5 Americans freed from Iranian captivity are now back in the U.S. They were greeted at a Virginia Army base early this morning by Special Presidential Envoy Roger Carstens.
On behalf of the President of the United States and the Secretary of State, it's an honor to be the first to welcome you back to the United States of America and to freedom.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 extending its September decline, with the NASDAQ 100 right now falling, let's say, about 0.8%. You have Amazon.com, NVIDIA among the giants falling there, dragging the NASDAQ 100 lower. Higher oil prices bolstering speculation that interest rates will have to be higher for longer to prevent a flare-up in the rate of inflation. You have Brent oil topping $95 a barrel. The Federal Reserve does kick off its two-day policy meeting on interest rates today. Joe Davis of Vanguard says policymakers, they certainly do have their work cut out for them.
The labor market is clearly downshifting. Even your last report from Challenger, I think, speaks to that. And so, again, cross currents are building in the U.S. economy. So I think they want to be on pause, but the near-term momentum may not allow them to do so.
And Instacart indicated to open at $39, 30% above its initial public offering price, probably the first trade sometime this afternoon. S&P 500, 28 points lower. That's down 0.6%. The Dow, 237 points lower. That's down 0.7%. The NASDAQ 100 right now down 122 points. And Katy Perry, the latest pop star to sell her music catalog, the singer sold her 5 studio albums to catalog rights company Litmus Music. According to Billboard, that's a $225 million deal. It includes works such as Firework and Roar?
Sure.
Hear me roar.
Yes, exactly. And Fireworks.
I thought that was Helen Reddy.
That great movie, The Interview. Have you seen that? Where Seth Rogen and James Franco, he, I believe, has been canceled, but in the movie, he wasn't yet, and they go to interview Kim Jong-un and try to assassinate him, you know?
Oh, that's
in the
where that
meantime,
came from.
James Franco and Kim Jong-un strike up a bromance that is hilarious.
Very good. News you need to know, right?
And that movie, you know,
need to
that's
know
what
that.
caused the North Koreans to go ahead and try and successfully hack Sony. Remember that?
Right, yeah, sure. And that was
Because
a
Kim
successful-
Jong-un had heard about that. He was mad. So
Right.
to get back, he hacked
I didn't know
Sony.
that. I did not know that. Great stuff.
Yeah.
All right, John Tucker, thank you so much. We appreciate it. All right, we got Joe Misek in studio, but it's not Friday. So why is Joe Misek, who covers all the municipal bond stuff for Bloomberg News, why is he in there? Because he wrote a Business Week column, a story that went back to his work on a little book, this little addition he had to this book called The Bonfire of the Vanities. And if you haven't read it, go back. It is the definitive Wall Street book of the great decade that was the 1980s, Bonfire of the
I don't know
Vanities.
about that, dude. Liar's
Absolutely.
Poker?
That came after. And Liar's Poker is very good, and that's also a great one.
Barbarians at the Gate?
Also a great one. That came after. Tom Wolfe, author of Bonfire of the Vanities. And Joe actually kind of was part of that. Joe Misek, tell us about kind of what small part you played in working with or helping Tom Wolfe, the author of Bonfire of the Vanities.
Oh, that was a pricing business. At one point, Sherman McCoy, the star bond salesman, is working on a transaction, and I was looking at the galleys, and there was a reference there, and instead of referring to the coupon and maturity, there was a reference to maturity. And it's like, well, what about those 13s? What about those 13 years? And I said, I called Tom up and I said, I think what they do is really talk about the coupon and the maturity here, like the 10s to 36 or something like that. And he said, okay, what would it be? I said, all right, smart guy. I had to go get the Monroe calculator out. And we kind of backed into it, and it's the 10/10s of whatever.
So you're helping Tom Wolfe with a little bond.
By the way, those rates, that's a throwback already.
Yes.
10%?
Yes, exactly.
Nice.
United Fragrance.
So again, big book there on Wall Street in the 80s. Tom Wolfe, there's a film coming out about him, isn't there?
Yes, there is. Radical Wolf by Richard Dewey. And it is a documentary about Tom Wolfe. And it's funny, Michael, it's based on a Michael Lewis article in Vanity Fair back in 2015. And Michael Lewis went to the New York Public Library where Tom Wolfe had sold his papers and kind of dove in and looked around a little bit and wrote about it, and then wrote about going out and seeing Tom Wolfe in Southampton. And it's just it's a fascinating piece of work. And Dewey points out, well, actually Lewis points out that Wolfe really became quite a performer. And Dewey points out that he accumulated 150 hours of film, not including interviews he performed, and more than 3,000 still photos. So you could see Tom loved the camera.
Yeah, and he became, Tom Wolfe became a player himself. Just all around the Hamptons, New York City, all that kind of stuff.
Yes, indeed.
Well, I will never forget reading the electric Kool-Aid acid tests.
Yep.
That was like my my first foray into the world of the Grateful Dead and kind of the Hells Angels. And I think that's probably the book that made him initially famous, right? But then he had so many hits after that. He wrote The Right Stuff, which became a movie. Obviously, Bonfire of the Vanities became a movie as well. He must be one of the biggest, most successful American authors.
Well, I would say that he was certainly probably the most interviewed and photographed of American writers, and that includes Hemingway and Mark Twain.
Gore Vidal.
So you actually went to this vault, right, in the New York Public Library?
Oh.
And what were you looking for?
I was looking for this, for the origin of the quote. There's a quote in the Bonfire of the Vanities, and Sherman McCoy's little daughter, Campbell.
Sherman McCoy's the bond trader.
Right? Bond salesman. Campbell McCoy says, "Daddy, what do you do?" And, she's like 6, I think, or 7. And I go, "Daddy, Willie, what do you do?" And he's fumbling around, and all of a sudden his wife Judy says, "No, I got this." And she says, "Well, Daddy, what Daddy does is he slices the cake and he hands it out and to different people, and Daddy gets to keep the crumbs." So Sherman is humiliated, and later on they're like, "Crumbs? Well,"
because he thinks he's the master of the universe,
master of the universe.
No, he's just
Great
handing out
salesman.
crumbs.
So I was in search of this quote, and I remember Tom Wolfe told me over dinner at Ben Benson's. I asked him about it. I said, "Who came up with that?" It was a very felicitous way of describing what bond salesmen do. And he said, Desmond Fitzgerald. And I tucked that away. And then last year I was searching around to write a column, and I said, "Gee, I wonder if I could find this in the Tom Wolfe papers." And I didn't find that, but I found something else.
What was it?
Well, Sherman McCoy begins as a writer. The series in Rolling Stone, goes on for like 27 episodes or 24 episodes. And Sherman McCoy's a writer of, and his famous book is called A Man in Slices. And of course, later on, he writes a novel. Tom Wolfe writes a novel called A Man in Full. Anyway, A Man in Slices. So I'm looking through Tom Wolfe's papers, and in February of 1984, the headmaster of his school, St. Christopher's
in Richmond, yep, know it well,
writes him a letter and says, "Hey, the Tom Wolfe had been, as you pointed out, already a successful author. He had been a trustee for St. Christopher's for about 10 years. So
said, get in touch with a certain.
So he wants it. So George McVeigh, who's the headmaster, says, "Could you get in touch with this guy, Kirk Materne, who was then at Lazard Frere, because he just gave us a very nice contribution, and we're ramping up our endowment fundraising." Okay, great. Tom does. Now, Tom is already writing Bonfire of the Vanities, but he writes a very nice letter to Kirk Materne sends back a letter on the Lazard stationery saying, wow, it was so nice of you to write me. Thank you so much. And, discusses their various lives and how they've, what they do, and invites Tom to lunch at 21.
Yeah,
the now shuttered 21. He and about 5 other guys.
Wall Street guys.
Wall Street guys. Says, I'm not going to put you on a podium. It's just an informal lunch. So Tom goes, has this fabulous time, writes to Materne, like, wow, your friends were terrific, and they introduced me to this place that I couldn't imagine.
This whole world of Wall Street and trading.
Whole world of Wall Street.
And so therefore, I'm going to change Sherman McCoy from a writer to a
banker and a bond salesman. Nice. And just and I saw this. It was taking place, and the papers themselves they're organized, but not tremendously so. So you really have to, what's going on here? Oh, here's another letter from Kirk Materne, and it's setting up appointments for Tom, including the Treasury auction at, I want to say, Salomon Brothers.
Sure, the biggest bond desk on the floor. And as an aside, I worked for Kirk Materne at Payne Weber, my first job.
Nice.
Part of the rotation. So it all comes full circle. And he had me, I did my first bond trade at the behest of Mr.
Do you think your kids are going to appreciate, the historical stuff that, like, people that you rubbed elbows with?
Of course not. They have no idea.
Come on, sure they will.
Or Liar's
They will.
Nah, they're creating their own history. They could care less about what I did, which is fine. But anyway, this is a great story. Check it out on the Bloomberg terminal. Joe Mysak, he wrote it. The Bloomberg Business Week is the story talking about Tom Wolfe, Bonfire of the Vanities, and
I
just
also
kind
want to
of
point out something. Tucker was talking about this earlier. I was wondering where Bonfire of the Vanities, the term, came from. And Tucker told
it's a
me,
phrase that goes back to, say, early Florence, when
right.
you had influencers like Michelangelo walking around. There was an attempt by the ruling families to keep things in line.
Well, the church,
morality.
The morality police, right?
The morality police,
didn't
basically.
Like it. And then in Florence, apparently, in 1497, a Dominican priest there, Girolamo Savonarola, decided that they
Savonarola, but you can't come in.
They decided they would gather together all of the stuff that the church considered sinful, like makeup and mirrors and books and art, and they would just burn it.
Bonfire of the Vanities.
And that was that.
Well, you'd also get beat up by the roving gangs, too.
Sure, they had thugs. They had their own thugs, the jackbooted thugs of Florence. But they burned everything that they thought was bad. So
there you go.
That's where it comes from.
We took that full circle. All right, Joe Mysak, thank you so much.
Hold, that's it?
That's it. That's it, my friend. We will talk Friday about municipal bonds, but this is a great one. Go to Bloomberg.com, check out, or Bloomberg Business Week. Check this story out. Good stuff. You can find it on the terminal as well. Joe, thanks so much. All right, let's take a look at these markets here. S&P 500 off about 0.7%. Same for the Dow. NASDAQ off a little bit more. Bailey Lipschultz joins us. He covers the markets here. Just kind of a solid, just sell off a little bit here today. Nothing crazy, but certainly a pause in the market for sure.
Yeah, definitely investors, maybe taking off a bit of risk ahead of the Fed expectations for a pause, but all the focus is on signaling and whether we will get another hike. When you're looking at the WIRP function, WIRP on the terminal, right now about a 45% chance of a hike through the end of the year, more modest expectation for cuts going forward. So it does seem like we're kind of in a wait-and-see market right now. And when you look at, broadly speaking, the volume that we've been seeing on the S&P 500, about 20% below the 100-day average at this point in time, 13% below for the Dow Jones Industrial Average. So, quiet, sleepy, summery Tuesday here.
In the midst of the worst month for equities, at least on average over the last 29 years, because that's as far back as I can look with the SEAG function.
September, not a good time to be long stocks.
September is the worst month for stocks, in the average over the last 29 years. And I think Bailey or Jess or somebody on the stocks team has taken it back further and confirmed that even, deeper into history, it's been just not a bueno month for stocks.
Bad month. I will say, Matt, if you go on the seasonality chart, you can toggle the starting month, and that's how you can see further back. So you're maxed out at 29 using 2023 as the end. But if you peel it back to 2000 or something, you can see further back. But the one thing that was pointed out, Frank Capillari, he's over at Cap Thesis, market technician, former guy from Nomura, really pointing out in his morning note that September's second half actually is typically the worst part of the month. So we're going into the stretch where we could see some of those sell-offs. And you look at, to Matt's point, when you look at the last 29 years using that SEAG function, September down 0.7% on average over the last 29 years. Right now, S&P off about 1.9%. So,
all right. So I'm looking at CART. You still haven't gotten that open for me. What's going on, Bailey?
Still,
I said afternoon, dude. I told you.
I know.
It's
You're
coming
right
out
again.
afternoon.
You're right again.
We're still seeing the book being built. The one thing to keep an eye on is that imbalance. So when you look at this on the QR function, right now, indications at $42. This priced at 30. So looking like a big pop, and you have to look at that size. Right now, that indication of $42 is on 1.6 million shares. Normally, we see at least 10% of the float. So still a bit of time for that to be kind of put together before we'll expect to see this open. But obviously, all eyes are on that.
We'll bring you those headlines when they come across. Bailey, I got a question for you. Do you care about the environment?
Yes, I'm from California.
Do you want to do your part to clean up this world and make it a better place?
Yeah, signing
Because
up.
you should not be here if that's the case. You should be working from home. According to a new study that was published yesterday in the journal Proceedings of the National Academy of Sciences, fully remote workers could produce less than half of the climate warming emissions of people who spend their days in the office like me and Paul.
Oh, boy.
We are the problem, Paul. And if you are, well, for not just if you want to reduce your carbon footprint by 50%, which is a big deal. That's your total carbon footprint in your life. You could reduce by 50% working from home. If you're a boss, if you're running a company and you care about climate, you need to tell your employees, please work from home. Do not return to the office.
No thanks.
And then you could, I don't know, if you say you have 10,000 employees, right?
Yep.
You could reduce their carbon footprint by 50% each.
Wow.
That's what you could do if you were the leader.
Really?
Yeah.
And this is according to
If you care.
I'm
saying if you care.
Right, if we care about the environment.
If you care about climate.
Yep.
If you don't care, keep them coming in. And, max
Is there
it
any
5 days a week.
offset to that, I wonder? That seems a little clean to me, a little too clean. Yeah.
This I read in the Washington Post by Allison Chu.
Okay, and that got you all fired up.
It's an analysis of various work scenarios, people's behaviors, sources of emissions. Researchers found that switching from working on-site to working from home full-time may reduce a person's carbon footprint by more than 50%. Hybrid schedules where people work, and I'm quoting here from the Washington Post, hybrid schedules where people work remotely for 2 to 4 days a week could also cut emissions by 11 to 29%, according to the study.
And that's kind of where
so my takeaway is, if you're running, I don't know, Goldman Sachs, right?
Yep.
So if you're David Solomon, if you care about the environment, as if David Solomon did care, and I don't know his feelings on the environment, but if he did care,
that's what he would do.
He would have his employees work from home.
Okay. All right. What do you think?
I don't know.
Yeah, see, there we go.
All right. I feel like personally I can make a lot of other decisions to reduce my carbon footprint, and I don't do this. But I also do care, but I guess I just don't care
drive
that
a
much.
naturally aspirated truck.
Well, I mean...
Whatever that is.
Well, now it's a naturally aspirated car, right? Because I got the 392 in the Dodge Challenger.
Which has been made... And now it's in the process of being shipped.
What I'm going to do is I'm going to try, you're right, I'm going to try and offset that. So I'm going to try and plant some trees or something.
Okay.
I'm going to donate some money somewhere. Because I care like that. But I don't care like not driving my car.
Good to know. And Bailey, he's a tree hugger from California, so who knows how far he'll go.
He's coming here from Hoboken. Think of the carbon footprint he creates on his commute every day.
I take the bus to the subway. Today I did walk, though. I walked from Port Authority. You got to get my steps in.
Good for you.
See, look what he's doing there. All right, good stuff. Bailey Lipschultz, sorry to put you on the spot there, my friend, but we know you're eco-friendly. And it is, what is it, Eco Week this week?
It's Climate
Week in New York.
I believe, yes.
Right. And that ties in with the United Nations General Assembly.
But if they cared,
they
would do it remotely.
Yes,
instead of traveling to New York, right?
Exactly.
I mean, if they cared a lot. But I'm sure they care a little.
Yeah, but you can buy a carbon offset. Can't you buy that?
Yeah, maybe they planted trees.
Yeah, okay.
And then they flew here.
S&P 500 off 0.6%, NASDAQ off 0.7%, 10-year Treasury 4.33%. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we are waiting for Ukrainian President Volodymyr Zelensky to speak at the United Nations. When he does, we will bring that to you live. We're also going to check in with Siobhan Sutton, Senior Investment Director, Sustainable Impact Investing Research at Cambridge Associates. Talk all about that, the climate, because it is Climate Week.
It is Climate
Week, so we're down with that. So, and the Instacart IPO. Eventually, it's going to get priced. We're going to check in with Mandeep Singh. He's a technology analyst at Bloomberg Intelligence. Get his thoughts on this company as he compares it to some of its peers as we wait for the trading of that one. But right now, let's kick this hour off with Charlie Pellet.
Much, and here's what's going on. The Dow, the S&P, NASDAQ, all in the red. Throw in the NASDAQ 100 index, the Russell 2000, a lot of red on the screen. Right to the numbers here. S&P down 28 right now at 44.24, decline there of 0.6%. Dow Industrials down 259, drop there of 0.7%. NASDAQ down 104 now, down by 0.8%. Stocks are falling. Bond yields are rising on the eve of the Fed decision tomorrow. Higher oil prices bolstering speculation that interest rates will be higher for longer to prevent a flare-up in inflation. 10-year yield now at 4.33%. We do have the 2-year yielding 5.08%. Spot gold down $1 the ounce to $19.32, drop there of less than 0.1%. Brent crude 95 even, up 0.6%. A barrel of West Texas Intermediate crude right now higher by 1%, 92.36 on WTI. The United Auto Workers Union says more of its members will be going on strike at General Motors, Ford, and Stellantis facilities starting at noon Friday unless substantial headway is made toward new labor contracts. We've got automaker shares advancing on a down day for the rest of the market. Ford up 1.6%. General Motors also up 1.6%. Stellantis shares up now by 2.2%. Recapping stocks lower with the S&P down 30, a drop there of 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that, as always. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We are streaming this thing as well on YouTube, so just go to youtube.com and search Bloomberg Radio. It is Climate Week, and we are all over that. Our next guest is as well. Siobhan Sutton joins us. She's a Senior Investment Director, Sustainable and Impact Investing Research at Cambridge Associates. Things that jump out at me. Board member at the Petty School. So you're graduating from the Petty School, is that right?
I am.
Awesome.
Proud alumna.
Great school down in Jersey. I competed against them a lot when I went to Lawrenceville. Great school. And then she got masters and stuff like that from NYU. But the highlight for me is undergraduate from Penn State.
Yep.
Nice. How cool is that?
UPenn. There's a difference.
Oh, it says here Penn State here.
No, that's University of Pennsylvania.
Oh, okay.
Go Quakers.
Because I wrote a lot of checks to Penn State University. So, Siobhan, tell us about, Cambridge, huge investor in alternative investments. What do you do there on behalf of Cambridge?
Yes, I work for the best team in the world in sustainability, in my opinion. We support our clients, our endowments and foundations, pensions, and private clients across the board, investing across asset classes, specifically in ESG, sustainability, and impact. And I specifically lead our efforts to focus on social and environmental equity investing.
What is that? Again,
to me, it's really leaning into this theme of climate justice, which has been really talked about for decades in social justice circles, but applying it to an investment lens, really incorporating that inclusion, not just as we think about securing the rights of those who are most impacted by climate change, but going further to ensure that the managers we invest with on behalf of our clients are considering that the benefits, the massive benefits from this green transition actually accrue to a wider group of stakeholders.
It's huge, actually. And I mean, at first it was overlooked by the Sierra Club, by the National Defense Resources Council, by all of these, sort of high-level, global warming opponents. But now, I guess the idea is businesses and governments will put sort of toxic things in places where marginalized people who really can't fight back live. So the not in my backyard keeps, for example, like toxic waste out of the backyards of wealthy white people, but they put it somewhere where people can't hire big lawyers and push.
Right in New Jersey, right across the river, it's hundreds of super sites in the state, but in Newark, New Jersey, my hometown, we hold about 4% of those super sites.
Wow.
That's one city.
Yeah.
So it's a very...
What is the biggest organization fighting for climate justice?
There are plenty. I don't want to name any one particular one. I will say that there is a growing number of organizations coalescing around themes to help investors actually implement this lens in their individual portfolios.
So when you go out to LP, limited partners, general partners, folks that are putting money to work, what's the response you get when you try to have this conversation?
Yeah, folks are excited. I think when I'm engaging with the GPs in particular, or general partners or the managers we invest in, I remind them that we invest in systems, not silos, not individual portfolios, whether we like it or not. So the investment decisions that we're making in individual portfolios on a cumulative basis impact environmental, financial, and social systems. I start there, and then I get them excited about the opportunities available to them in private equity and venture capital, and the managers that I've personally underwritten in our team has done with due diligence on.
So in terms of, we were just talking with someone who told us if we don't stop wasting energy, it doesn't matter that we, support the transition to these new energy sources. And I wonder how much of a focus that is.
I just heard that interview.
Yeah.
I thought it was a powerful statement. I think my takeaway from that comment was that we can do all of the positive adjustments we can, and I apply it to this lens here, but if we forget the people and communities involved and most impacted, we're gonna run into this cycle of social unrest that costs money. We're gonna increase the number of strikes we see because people want to benefit from this change. We're gonna see this unrest that is gonna cost everyone. So we need to be thoughtful about wasting human capital in this case.
Do you get, how early do you guys get involved with companies? I think about early stage VC versus later stage private equity. Where do you guys play?
We're focused on managers. We do have a separate co-investment team that does direct deals, but my group focuses on fund managers.
Okay.
And so we invest in them, we run due diligence on them, and we engage with them on this specific topic.
And so I guess the question, like here in the United States, it seems like just ESG broadly defined has become politicized. In the rest of the world, it has not, by and large. How does that kind of come up in your day-to-day discussions?
Yeah, it's an important one, and it creates a headwind for us, but we're leaning in. Our clients are committed. They're naturally mission-oriented because they are predominantly endowments and foundations. And so we keep the ball going. We believe that there's not just opportunity to do well here, but opportunity to intentionally do good. And so we're all in, we're focused, and we're finding those positive performance narratives to help bolster investment as well.
So what do you hope is achieved this week? It's Climate Week here in New York. Everybody's, flown in on private jets from all over the world to try and stop global warming.
The irony.
How can they, what are the best, you think, things that can get done this week?
I'm a big believer in let's stop talking about it and let's get some action. So I'm really excited to hear what comes out of the UN, and it's going to set the stage for COP28. I'm sitting on several panels yesterday and going on this week to really bang the drum for climate justice, getting people really focused on paying attention to the opportunities that are going to help not just portfolios, but communities at large most exposed to climate change.
What are some of what are some discussions you like to have when you go out and talk to your GPs and LPs? What are the big items for you guys at Cambridge?
It runs the gamut. So I have colleagues who are talking about the general integration of ESG into investment portfolio decision-making and processes. I am heavily focused on market rate returns, impact, driving folks to invest in healthcare, education, climate justice integrated in these systems. So I get really excited about that because oftentimes, and what's not been covered enough is that human element and that human-centered focus.
What is some of the return data that you do cite to support your position?
Yeah, we're seeing investment managers put up mid to high double-digit returns. We've seen over time that these are market rate opportunities that we're able to successfully source, and it's not an area where you have to give up return, and that's the exciting part, and it reinforces the investment opportunity and demand.
All right, Siobhan, thanks. I think it's very cool, and I think people don't dig enough into the environmental justice piece of it. They're so focused on, the greenhouse gases issue.
Absolutely.
And, saving. I agree that we need to save our national parks and the whales and stuff, but we also need to save our people, right?
Absolutely. Absolutely.
So
it's all integrated.
I think it's key. Siobhan Sutton is Senior Investment Director, Sustainable and Impact Investing Research over at Cambridge Associates.
All right, great stuff. Appreciate it. Let's switch gears. We had a little bit of housing data come out today, and I want to break down. I mean, the housing starts well below forecast, well below last period, but the building permits are up. So I don't know what's going on here because, you think about it and it's just, you try to get a sense of where this housing market's going. Nora Melinda, she joins us here in our Bloomberg Interactive Broker Studio. Nora, what did you make of some of the housing data we've gotten over the last couple of days?
Right, as you mentioned, it's a little confusing because, we do have housing starts data showing this morning that it dropped to its lowest since 2020. That was back March 2020, right when the pandemic began. And so that is a pretty big plunge that we are seeing. Residential starts decreased 11.3% last month. And it was a pretty significant drop. And as I was watching stocks, watching the group, you would expect that home builders would have fallen on the news, but they actually didn't. As you mentioned, applications to build showed a little bit more positivity. And of course, that's a proxy for future construction. It picked up to 1.54 million. So that's pretty encouraging for investors. And that's pretty much why people are seeing that the stock market didn't really react negatively as expected.
What are we hearing from some of the home builders these days? I know they reported earnings a couple weeks ago.
Yes. So we had Lennar recently report last week. We have KB Home reporting tomorrow post-market.
Oh, okay.
So Lennar was actually a pretty large beat. It was pretty significant, and it did pretty much give positivity toward the sector. But moving forward in its forward guidance, that did make investors a little bit unsure as to what the path ahead may look like. But of course, we are done with spring selling season. We're entering the fall, and city analysts actually do say that we shouldn't really be alarmed. Of course, rising mortgage rates and rates are really pressuring the sector, but this is actually typical for the season
to see a
downturn.
Rates? So Paul is one of the few people in the country with a floating rate mortgage, right? Adjustable rate mortgage, because he's hoping that in the soft landing, with a lack of a recession, the Fed is going to cut rates.
Yes.
And then they'll be able to refi.
Well, let's hope.
What's the outlook for mortgage rates? I mean, we're above 7% solidly.
I mean, the view is pretty much mixed. Of course, people are really hoping that they will come down, but it's still yet to be seen. And as this is a pretty pressuring time period, and people are really alarmed by the high rates. In the event that the Fed does really pull back on its rates and start to come down a little, then of course that will give us some support in regards to mortgage rates.
Well, the home builders, I mean, there's still that secular story out there where there's just not enough homes, right? I mean, and the question is, what do they build, I guess? Do they build the high margin McMansion, or do they build really what the market needs, which are some starter homes? What did the home builders say there?
Mm-hmm. And that's really the question. Of course, when you look at companies like Toll Brothers, which actually kicked off third quarter earnings season for home builders a few weeks back, that's a luxury home builder. And so people are really focused on some of the, KB Homes, D.R. Horton, and those names to really see what entry-level buyers, what accessibility there is for them, because is that really going to open up homes for the common American? And that's really a longstanding question that we're all wanting the answers to.
And I mean, what I do see being built are just apartment buildings and condos all over the place. I mean, it's
multifamily.
Multifamily, yeah, thank you. I mean, that seems to be a big area of growth, and maybe that can address some of the housing issues out there.
And, coming off of today's data, multifamily construction, it plunged to its lowest level since the onset of the pandemic.
Oh.
So that's a little interesting there. Of course, people are really hopeful for the multifamily apartment space, but we did see some strength when it comes to single-family homes.
Nora's part of the UVA mafia here.
I know.
Have you noticed how
Mafia?
many? Have you noticed? Sorry, the mafia doesn't exist. Have you noticed how many UVA? We have Norma Linda, Kaylee Lyons, Danny Berger, Kriti Gupta. I mean, the list goes on and on and on. Somebody must have been recruiting down there.
Who's next?
I know. Why is that? I mean, it's just a natural
Were you
progression.
down there on campus?
I
Were there
think
Bloombergs everywhere?
The funny thing is, I found out about Bloomberg through Kaylee. So, she's been a great mentor of mine, but I wasn't as super familiar with it at UVA. But I think there is a large presence of recruiting for UVA.
Is there a journalism
Emily
school
Graffeo, I think?
Emily Graffeo is also UVA. Wahoo wah.
Exactly. Well,
For those listeners.
I understand the Carolina connection. A, they have a
Right.
journalism school, and B, we have a certain senior executive here at Bloomberg who's a big Carolina guy, and I remind him of their
Peter.
Yeah, their poor basketball heritage, but and then we got the UVA thing. So as a Dupers, I'm just completely surrounded by all these ACC people. So anyway,
it.
all right, Nora, thanks so much for joining us. Appreciate it. Getting a sense of what's happening out there on the housing market. Norma Linda, she covers all the markets here for us at Bloomberg News. And Matt, looking at the market here, it's just kind of hanging down here. It's not a ton of volume. It's kind of in line or a little bit lower, down 0.7%. But we have the Fed.
And the rates picture already. I mean, today we were up. I saw a high on the 10-year at 433.66.
Yep.
Or right near there right now. Sorry, 435.66. Right now we're at 433.26. I saw the 5-year rate go to the highest since 2007.
Yep.
The 2-year obviously solidly over 5. So rates are already at multi-decade highs or decade and a half highs right now. And then you've got the oil picture, which I think it just continues to rise. And over the past few days, the question has been, is oil up because of demand growth and a strong economy?
Right.
Or is it just the supply cuts that we've seen out of OPEC Plus? And I think the consensus is now gelled around supply cuts. The issue is the Saudis and the Russians hand in hand deciding to cut production, and that's boosting prices. And my question then is, does that threaten the soft landing narrative? If we continue to see these high prices here, is that a problem for the U.S. economy?
And is it a problem for the Federal Reserve? Again, tomorrow we're going to hear from the Fed, FOMC rate decision at 2 p.m. Wall Street time. Press conference that starts around 2:30 Wall Street time. Michael McKee, he's flying down as we speak to Washington, D.C., so he'll be there to probe the Fed officials, and we'll get a sense of kind of where they are here. But a lot of folks...
He flies to D.C.
Yes, and
that is weird.
And then he trains to Boston. I
would
the
do
exact
it the other way
opposite.
around. Yeah.
I don't know. I do the exact
I would take
opposite.
the Acela to D.C. and I would fly to Boston.
That's kind of what I've done historically. But maybe Mike's onto something. He's been doing this for a few years, so we'll see. But again, WTI crude oil up 0.9%, 80 cents, $92.24 on WTI crude oil. How about that? Yep, absolutely. This is Bloomberg. Let's get some company news with Lisa Mateo.
Thanks, Paul. Shares of Starbucks are lower after TD Cowen downgrades the coffee house chain to market perform from outperform. Bloomberg's Abigail Doolittle explains why.
The reason behind it is China. Now, I do have a source who just recently returned from a trip from China saying that the economy there is much worse than what is being reported on and that the youth unemployment is much higher than expected. So that would confirm this call, along with various China bears talking about the backdrop there, especially around the property bubble and the credit crisis that seems to be unwinding.
But Doolittle does say that Starbucks business in August was strong, up 48% in China on a year-over-year basis to nearly $1 billion. Shares of Starbucks right now, they're down about 2%. Disney is developing plans to expand its parks and resorts segment to $60 billion over the next 10 years. Bloomberg's Ed Ludlow has that story and more.
That would represent doubling CapEx commitments to theme parks, cruise lines, products and experiences. It's interesting to see some of the strategy playing out now that Bob Iger is settled back in as the returning CEO. Also, another piece of news breaking, ESPN and Disney Entertainment CFO Brian Castellani is leaving the company, the latest executive departure. He is heading on to take a role at Warner in their finance team.
Shares of Disney right now down more than 3.5%. And sources tell Axios that the XFL and the USFL pro football leagues are in advanced talks to merge. Fox Corp, well, they own the USFL, while XFL, that's owned by Dwayne "The Rock" Johnson, his business partner, Danny Garcia, and Redbird Capital Partners. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow, the S&P, and NASDAQ all in the red. Slight bounce off the bottom for the S&P, but still down 29 points. Now a decline of 0.7%. S&P at 44.23. The Dow lower by 265 points. A drop there of 0.8%. And the NASDAQ Composite Index now down by 106 points. A drop there of 0.8%. 10-year yield 4.33%. With a 2-year that's yielding 5.08% on that 2-year. Spot gold at $19.33 the ounce. Little change, down 75 cents the ounce. And West Texas Intermediate crude 92 even a barrel. WTI up 0.6%. Barrel of Brent just below 95 now. 94.86 on Brent, higher by about 0.5%. Stocks lower. Bond yields are rising on the eve of the Fed decision. Higher oil prices are bolstering speculation. Rates will be higher for longer to prevent a flare-up in inflation. We are awaiting the start of trading on Instacart. We'll keep you updated on that IPO. Rocket Lab shares, they're plunging 7.7% after a failed mission to space led to the loss of its primary Electron rocket and the payloads it was carrying to orbit. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thanks very much. Charlie Pellet there with your Bloomberg Business Flash. I am excited to talk to Werner Hoyer, who's just come into the studio here. He is the president of the European Investment Bank, which is one of the biggest supranational lenders in the world. They are the development arm of the European Union.
Got it.
And so, Werner, thanks so much for joining us. You invest, for example, I imagine you finance the EU's green transition, as well as, I wonder, do you have an interest in financing the defense industry of the European Union?
Not really. We do quite a bit when it comes to dual-use activities and technology promotion, but we are not directly involved into arms and ammunition.
I'm just because of the Russian invasion of Ukraine, and we have Zelensky here.
We are very in Ukraine. There's two reasons. Number one, we are, of course, active in Ukraine since the independence of Ukraine. But in 2014, we did a step change because I said at that time, guys, this guy is not going to stop in Crimea. So this will go on. And then we stopped our business in Russia and diverted the funds which were available for Russia to the neighboring countries, to Moldova, Georgia, in particular to Ukraine. So when the war started, we were already there, and we could beef up our activities there.
So what kind of activities are those? I mean, what are you investing in there? And I guess you take equity stakes, you lend money, you have a number of different transmission mechanisms.
We are a project financier, so we invest into concrete projects, and sometimes we are a little bit diverted because we see the military needs and all these things, but it's also an absolute necessity to keep the economy running, and the Ukrainians are doing a fantastic job under the circumstances under which they live, and that means the infrastructure must work. If you want to keep the economy rolling, your bridges, your railroads, your public transportation systems must work. And this is the key area of our activities. Also the health sector, which is vital in the best sense of the word. So we are very active in this field as well. Just restored or financed the restoration of the destroyed hospital in Odessa. So these are very important projects.
The reconstruction, eventual reconstruction in Ukraine, how do you envision the role of the European Investment Bank?
Well, I think as far as the European Union will be involved, we'll have to be involved quite a bit as well. And probably we are, in a certain way, in the lead. On the other hand, what I insist on now is there is no possibility, no responsible possibility to wait for the end of the military confrontation before you begin with your reconstruction. Because what is needed now is keep the economy rolling, keep the tax revenues coming in, keep the agricultural sector being able to export, and not overlooking the fact that Ukraine is also a very interesting partner country for industry. So these support measures for Ukraine must take place now, and not once one day, hopefully, the ink under a peace treaty is dry.
How is the EIB financed? Do you sell bonds or?
We sell bonds. We are selling between 70 and 100 billion euros EIB bonds per year. A considerable part of them, by the way, green bonds nowadays. We were the pioneers in the issuing of green bonds. And so this is the basis of what we are doing. The capital endowment of the bank is big, but in comparison to our lending, ridiculous. We have never seen more than 25 billion euros in cash from our shareholders, but we have a portfolio of almost 600 billion euros. So the leverage effect is enormous, and that is due to the trust of the capital markets in the bank and its technical experience. We are an engineering bank, a bank that is endowed with fantastic people from science and technology, and this makes sure for the investors who give us their money that we invest into bankable but also technologically doable projects.
By the way, the EIB was one of the first, I guess, supranational organizations to, I'm pretty sure, and correct me if I'm wrong, Werner, to issue a bond on the blockchain or to issue a digital bond in essence.
Yes, we are always trying to pioneer in these fields, and it's fascinating when we issued the first green bonds and made sure that what's labeled green is green and there is no green cheating or something like this. I think we were considered lunatic, and now this market is $1 trillion heavy.
Well, what is, I know you guys were first with the green bonds, what is that market conditions like today?
Well, it is, the market's partners are very, very interested in this, because it serves their own sustainability, not only image, but reality. And nowadays, everybody who invests into anything in Europe must be in line with these principles.
In terms of the IRA, I mean, a lot of Europeans were unhappy about the kind of subsidizing and almost protectionist, I guess you could use that word, bent, of this legislation. Do you have an answer to that in Europe?
Well, the mixed feelings. Number one, I am happy that under President Biden, the U.S. has redetected climate change and sustainability. So this is very positive, and President Biden takes the entire economy along. On the other hand, I'm not naive when it comes to distortion of competition. Then it's something that affects us seriously. So we need to come to common terms with the United States of America. But I don't believe that a trade war is the brightest thing to do now. It's more about finding synergies and taking on the challenges together.
In fact, I was talking to Ola Kalenius yesterday, who was making similar statements, saying that we really need to support global trade as well in order to kind of lift all of the boats, right? Or to grow the pie.
I completely agree.
But right now the EU is looking into I guess, ways, if I'm going to say it without kind of camouflaging it, to block the import of Chinese electric vehicles to Europe. Does that concern you?
Well, it would concern me if it would be so simple. I mean, Vice President Dombrovskis of the European Commission is right now on his way to China to come to reasonable terms with the Chinese. And I think there is, between Europe and the United States, but also between Europe and China, some commonality of interests. And we should go for that.
Because one of the things I know about, obviously, the economies of Germany and other large European economies is perhaps a very strong trade relationship with China. Where do you guys fit into that? How do you think about that?
Well, what we have learned from the terrible experience with the Ukraine war is that you better stay away from being too dependent on somebody. Whether it's on security from one partner, whether it's from trade from one partner, or when it's from the provision of critical raw materials from another one. So we have to diversify in every aspect, and that's, I think, the lesson we have learned.
I wonder about the green investment here in this country. ESG has become a negative term attached to any investment vehicle, but that's not the case in the rest of the world. And do you expect to make real returns on these investments, I guess, is the most important question, outside of the climate issue?
Well, for us, that's key. I mean, we are dependent totally on the financial markets, which give us their resources. They trust us. They trust us because they know we are engineers and scientists-driven bank. So we make sure that a project that goes through our due diligence is bankable, is technologically feasible, and then at the end of the day brings returns.
Lucrative.
And I think we should always, I mean, in view of the times where we talk about doomsday scenarios from morning to night, we tend more to the can-do approach and say, yes, if we develop the right technologies, and yes, we can do that, then we should be able to meet these challenges.
We were just talking about sustainable energy with somebody who runs a nuclear fuel company. And I know a lot of people consider nuclear power to be safe and clean now. That isn't really the view from Germany.
No, from Germany, it's a different view. I mean, politically, it's also a divided issue. And the same goes for the European Union. So as a bank that is dependent upon the support of its shareholders, which are totally split on this issue, I don't hang my head out. The statutes of the bank do not keep us from financing these things. In reality, we have never done it. What we have done instead a lot is investing into safety, security, and into dual-use opportunities.
Werner, just real quick, your successor, what can you tell us about a potential successor?
Well, I can only say one thing. I leave the bank with a very, very good feeling after 12 years. My mandate is running out. The member states have proposed 5 outstanding candidates. I'm very proud that we have brought the bank to a place where people of this caliber are interested in taking the lead.
Do you think there needs to be a woman president?
That would be wonderful, but of course we have not beautiful, but perfectly excellent gentlemen in the race as well, so I don't take any side.
How about a liberal in the European sense? I know Lindner said he wants continuity, and you're an FDP guy.
Liberals are always good people.
All right, Werner Hoyer, thanks so much. Werner Hoyer, President, European Investment Bank. We appreciate getting some of your time. Right now, let's head down to Washington, D.C. Nancy Lyons has got world and national news.
Thanks, Paul. Ahead of a speech from Ukrainian President Volodymyr Zelensky expected in just minutes, President Biden addressed the UN General Assembly today and outlined his foreign policies, from promoting democracy to human rights to sovereignty.
The president spoke of the coups in Africa that overturned free elections, the chaos in Haiti, the existential challenge of climate change. Then he turned to Ukraine.
Russia's price for peace is Ukraine's capitulation, Ukraine's territory, and Ukraine's children. If you allow Ukraine to be carved up, is the independence of any nation secure? We have to stand up to this naked aggression today and deter other would-be aggressors tomorrow.
President Biden also called for regulations to govern artificial intelligence before it governs us. In Washington, Irv Chapman, Bloomberg Radio.
Members of the Ukrainian Defense Contract Group are gathered in Germany to discuss the status of fighting in Ukraine. Defense Secretary Lloyd Austin says more U.S. equipment is coming.
The M1 Abrams tanks that the United States had previously committed to will be entering Ukraine soon.
Austin also urged leaders from other nations to continue to dig deep and provide ground-based air defense for Ukraine. Marine Corps flights are suspended after an F-35 disappeared for hours when a pilot ejected over South Carolina on Sunday. Debris from the plane was eventually found around 100 miles north of Charleston. 5 Americans are back on U.S. soil after being released yesterday by Iran as part of a prisoner swap. They landed early this morning at the Fort Belvoir Army Base in Virginia. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg. Just getting word from Amazon that it's going to be hiring 250,000 employees this holiday shopping season, and it will boost average pay for logistics personnel to about $20.50 an hour as it seeks to recruit and retain workers amid a labor shortage. Amazon shares right now, we do have Amazon trading lower by 2.6%. We are awaiting the start of trading for Instacart. We'll have more on that IPO with our Mandeep Singh coming up in just a moment right here on Bloomberg Markets. Stocks lower across the board here with the S&P down 34 now at 44.19. That is a drop of 0.8%. The Dow down 294 points, a decline of 0.8%. NASDAQ, the composite index, down 114 points, down 0.8%. The NASDAQ 100 index down 0.9%. 10-year yield 4.33% with the 2-year 5.08%. Spot gold at $19.31 the ounce, down by about 0.1%. And West Texas Intermediate crude up 0.4%, 91.83 for a barrel of WTI. Energy stocks, for the most part, are trading mixed right now, but crude oil is higher. What about valuations for some of those energy names? Scott Cronert is managing director at Citigroup Global Markets.
The issue with the energy sector is pretty clear. There's a view that over the next 10 years or so, the fundamentals are going to move away from traditional, energy sources and towards alternate energy. And so these companies have to find that balance between pursuing growth, but in a rational way, while also returning capital to shareholders while they can. So all that told, we think it's an attractive place to have more exposure.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Among some of the energy stocks today, ExxonMobil down 0.5%, ADRs of BP up 0.8%, Chevron down by 0.2%. Recapping stocks lower, S&P down 34, down 0.8% as we await Instacart. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pello, thank you so much. We appreciate that. Matt Miller in absentia and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube.com. Instacart, CART is the symbol. They priced this thing at $30, high end of the range, good for them. They still haven't gotten it open, though, so I don't know what the underwriters are doing. In my day, we'd get this bad boy open by 11 o'clock, no problem. Let's bring in Mandeep Singh. He's our senior tech analyst. He covers all this stuff for Bloomberg Intelligence. Mandeep, what is Instacart to you? Because I've been reading more and more about advertising as part of one of the revenue growth drivers. What is the business model here?
Well, so the closest competitor for Instacart is DoorDash. Okay. They deliver groceries. DoorDash delivers food, and Uber does both. They do delivery as well as ride sharing. So those are the two comps I would highlight in terms of what they do. And right now, I think market is trying to figure out a business model like this, which is predominantly delivery, but they have been successful in layering ads on top of that delivery model. And I would say you can apply ads simply because when you're shopping for groceries, you want to be recommended stuff. What is it that you want in addition to what you had in mind or what you were searching for? And that's where ads kick in. It's 30% of their business. Very surprising. I think that was a revelation when the S1 was filed, is how could a delivery business have 30% ads? And as we know, ads are, 80 to 90% gross margin. Yep. So clearly that is what investors are looking at. And you could see a pop driven by enthusiasm around what they have done on ads. But the top line story is weak.
Yeah. Okay.
And that is the part that I think with all the gig economy companies, growth has tapered off. They were pandemic darlings, especially on the delivery side, but then growth tapered off sharply.
Do you think that's reflected in the valuation here?
I think that's what they did well. Relative to ARM, they priced the IPO at 3 times sales, even below DoorDash, current valuation. So they came down in terms of the pricing, and that is why we are talking about having a pop, because they priced the IPO well. On the other hand, you compare it to ARM, they were at the other end of the extreme, where, pricing at 20 times sales.
Wow.
For it, yes, they have steady royalty business, but when you price 20 times sales and you're not even growing 20%, there's a problem.
That's a problem. Instacart, again, as Mandeep said, priced at the high end of the range, $30 a share, has not yet opened. Instacart is indicating to open at $42 a share, so we'll keep an eye on that. And so, and ARM, the issue with ARM was, I was asking you to pay that premium multiple for a company that really hadn't proven yet that it was going to be a big player in AI. Is that kind of the concern?
Well, I would say not so much for Instacart right now, because everyone knows their top line isn't growing. So it's like 5 to 10%. And Instacart is a seasonal business.
Yep.
You're going to have more orders during wintertime when you need the convenience. So the fact they are coming at fall, they're going to have 2 quarters of acceleration because of the seasonality.
Okay. Now, ARM, Instacart, these are down rounds. You don't typically see a down round in the IPO market vis-a-vis the last private round. Is it a scenario where once a couple of companies go and kind of get rid of the stigma of doing a down round, that maybe you'll see a whole bunch of other companies that were waiting for those 2021, 2021 valuations to come back?
I mean, I don't think 2021 valuations are coming back, because that was really a low interest rate phenomena, what happened there. And right now, I think you're right. They probably have opened the floodgates if the market holds up and, you don't see a big drop in the indices. I expect more companies to come out and just try out, what kind of valuations they can fetch, because what Instacart has done is really taken down their valuation by almost, 70%.
Right. Yeah, it's amazing. Amazing.
And so that's why we're talking about a pop right now. And I think that it's more realistic.
Is there a feeling in the marketplace when you talk to investors, like how many of these food delivery companies do we really need? It's almost a similar discussion to how many ride-sharing companies do we need? Can the market support? What's the feeling in the market about this food delivery stuff?
I think everyone feels there could be more consolidation. And right now we are at a point where you won't find any VC funding a new startup that does, delivery or these kind of things. So clearly it's a scale business, and you're left with 3 or 4 main competitors. And Instacart, even though it doesn't have the scale of Uber or DoorDash, it's still a much smaller player. You can see how, if they're able to improve their unit economics through ads, they could be a viable business if, they are among the last 3 left in this business.
It's just amazing what's happened in that ride-sharing business, Uber versus Lyft. Uber with a market cap of $95 billion and Uber with like $4 or $5 billion. Boy, the market has really spoken here about which company they prefer.
Scale always wins in marketplaces. It goes without saying. If you have the scale, you will eventually make money.
What do you think happens to Lyft? I mean, did they just stick around here at this subscale thing, kind of sitting around with no real access to, I guess, growth capital? What do they do?
I think the options are limited. Maybe, DoorDash or someone else buys them. They expand their, adjacent markets. They're right now only doing delivery. If they want to compete with Uber, they could have a ride-sharing element to it. But clearly, we know these businesses are much lower gross margin, and you have to be very careful in terms of how you integrate the businesses. If there is no ads element, I would say on the face value, these businesses are not very profitable. It's just you have to bundle them, you have to layer ads, you have to do something to really make it work when it comes to generating free cash flow.
And there's no reason for Uber to buy Lyft, right? Because it's just kind of
I think the regulators won't let that happen.
Really?
Because then it's like Uber becomes a monopoly.
Yeah. Interesting. I don't know. I just opened up my apps, and I just picked the cheapest ride. But apparently, Matt Miller does not do that. He just goes to Uber because he's got brand loyalty. I don't care. I just go for the cheapest fare I can find. I figure they're the same drivers anyway, same cars more or less. I don't know. That's how I play it. But the market has certainly spoken on that ride-sharing business. Uber, big thumbs up. Lyft, not so much. Mandeep Singh, thanks so much for joining us. We were hoping we were going to get this Instacart thing, stock trading while you were sitting in here, but no go. So the investment bankers are taking their time here. Mandeep Singh covers all the tech for Bloomberg Intelligence. We appreciate getting some of his time. S&P 500, it is down 0.8% here. NASDAQ off about 0.9%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. Goldman Sachs CEO David Solomon is safe in his role for now. In a note following a meeting with the lead director on Goldman's board, Wells Fargo analyst Mike Mayo says Solomon isn't leaving anytime soon, and Mayo will be joining Bloomberg TV in the next hour. Goldman Sachs shares are down about 1.5%. Santander overhauled its corporate structure as Chief Executive Officer Hector Grisi looked to simplify the company's operations. We get more from Bloomberg's Stefania Bianchi.
Well, as we understand it, what's going to happen is that it's going to combine its individual countries' retail and commercial banking operations and then rearrange them into 5 units. And this is going to be digital, retail and commercial, payments, wealth management, insurance, and then corporate and investment banking. The idea is really to simplify the business and really drive profitability.
And shares of Santander right now, they're up about 0.5%. And this just in, Instacart has started trading. Right now, shares are up about 40%. Bank of America has named new co-heads to lead its North America Industrials Investment Banking Unit. According to a memo seen by Bloomberg, Loli Wu and Bill Young will be responsible for expanding the business in the U.S. and Canada. And speaking of Credit Suisse, HSBC Holdings has made a series of hires from the defunct Swiss Financial Group as it looks to expand its global equities unit. Right now, HSBC shares, they are up about 1%. And Amazon says it will hire 250,000 full and part-time workers this holiday season, with some eligible for bonuses. It also plans to boost the pay for logistics personnel. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, we finally got it open. Instacart, C-A-R-T is a ticker. It opens. It is up $41 a share. It priced at 30. So a nice little, close to an $11 pop, 36% above. So a nice little opening trade here. Let's see if it can hold it. So let's break it down a little bit with Bailey Lipschultz. He covers the equity markets and the new issue markets. So Bailey, nice first day trade here.
Really strong open, as you mentioned, trading up at the highs so far this afternoon, 43% above where the IPO priced. Things to keep in mind, though, this is a deal that did sign up cornerstone investors to eat up a good chunk of those shares, a smaller pool. So similar to what we saw with Oddity, with Kava, some of these stocks that have performed quite well on day one, expectations really are, can this follow through in the coming days and weeks, which will be the real test of how investors are thinking about Instacart.
Yeah, it's interesting. Yeah, we just had Mandeep Singh in from Bloomberg Intelligence. We were talking valuation, and he said Instacart priced its IPO vis-a-vis the peers, DoorDash and so others, at an attractive valuation multiple, where ARM really pushed it vis-a-vis some of its peers. ARM trading down another 4% today. I mean, the company goes to your point, Bailey, about how sustainable these gains are. Again, an IPO to 51, got an intraday high of 69 or something. Here we're at $55, down another 4% today.
Yeah, down 13% over the last 3 days. When you're looking at the sell side reaction initiations, we've got 1 buy, 2 holds, and 1 sell. Redburn initiating today with the neutral rating. Really a lot of caution on whether this company can live up to the AI pitch that it had hit the road talking up, obviously wanting to ride the wave that NVIDIA has carved out. But if you can't live up to those expectations and you have SoftBank holding about 90% of the stock, it creates questions for investors wanting to put money to work that can't get a large chunk of shares.
Yep, and I guess one of the issues here for a lot of investors and just market observers in general was these are down rounds. These public IPO valuations are actually a lower valuation than recent private market transactions that were admittedly done at the peak back in 2021 and before. But maybe, just maybe, if you get 1 out, 2 out, 3 out with these down rounds, maybe that reduces the stigma a little bit and opens the doors for some others. Is that how, when you talk to your sources, what are you hearing?
I think that's the big focus. The one to watch will be Klaviyo. It's pricing tonight. It's going to debut tomorrow. In that e-marketing kind of SaaS model, a true VC company, a true VC-backed company, a true technology company. That's the one that when I talk to investors and bankers, people are paying attention to because ARM was public once before. It is majority owned by SoftBank. Instacart really missed the boat with the 2021 bump and that massive round that they did at a $39 billion valuation. A lot of people are really interested in what Klaviyo will do tonight.
Klaviyo going to be a down round valuation-wise?
Slightly below. So their last fundraising round, I believe, was at $9.5 billion according to PitchBook. Right now, we just had it hitting the wire that they're planning to sell shares for $29. So when you look at that valuation, a slight down round, but not quite, obviously not the massive drop that we saw with Instacart.
Right. And you know, back in normalized times, you would never see a VC-backed, or rarely see a VC-backed company come public at something other than a major mark up to the latest round.
Exactly. You wanted, normally back in the go-go days, 2020, 2021, VCs are making their money. Investors who are buying into the IPO are making money with that day one pop. Very different dynamic in the current environment where we're seeing the IPO market creak open, but you have to have these deals trade well and in order to draw back some of those IPO buyers.
Just real quick, what's the calendar look like for the next few weeks?
Klaviyo is the big one. VNG is a Vietnamese company we're keeping an eye on. Expectations maybe in the next couple weeks, and then Birkenstock, obviously, all eyes will be on early October likely.
Okay, so we had a little burst here right after Labor Day that we expected to see, and getting some good first day pops, including today with Instacart. But the question is, Bailey's been reporting all along, is can they keep these gains? Instacart, $39.50 after a 30 pricing, so a nice move there. S&P 500 off 0.7%. Same for NASDAQ. On the yield front, yield's moving higher here. They got the 10-year Treasury up 3 basis points, 4.33%. Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of a new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
12 days to a government shutdown and 5 days into an auto strike. Welcome to the fastest show in politics. As Speaker Kevin McCarthy tries to tame the herd and pass a stopgap funding measure to keep the government open past the end of the month, President Biden making the case for Ukraine funding at the UN today, and the United Auto Workers now set a Friday deadline to scale up their strike. We're joined this hour by Congressman Brendan Boyle, ranking member on the House Budget Committee, with a lot to talk about today. An analysis from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour, and we start, as always, with a look at Wall Street. Let's get up to date on trading right now. Here's Charlie Bell.
Hi, thank you very much, Joe Matthew. Stocks lower across the board, but we got to begin with Instacart. From the supermarket to the stock market, Instacart pops at the open. Right now, Instacart shares are up 31% after the deal priced at the top of a marketed range that was already boosted. The offering raised $660 million. It is the fourth biggest U.S. IPO of the year. Our Bailey Lipschultz is following the IPO for Bloomberg News.
Things to keep in mind, though, this is a deal that did sign up cornerstone investors to eat up a good chunk of those shares, a smaller pool. So similar to what we saw with Oddity, with Kava, some of these stocks that have performed quite well on day one, expectations really are, can this follow through in the coming days and weeks, which will be the real test of how investors are thinking about Instacart.
And right now, Instacart is up by 29 points, 29%, I should say. We do have the Dow, the S&P, and NASDAQ all in the red, with the S&P down 29. That is a drop of 0.7%. The Dow lower now by 266 points, down 0.8%. NASDAQ down 88, a decline there of 0.6%. 10-year yield 4.33%, with the 2-year 5.08%. Spot gold down 0.1%, 19.31 the ounce. Crude up 0.3%, 91.72 a barrel. Blackstone CEO Steve Schwarzman says the American public is not interested in older people running for office, and that could throw a surprise in the 2024 presidential elections. Schwarzman weighed in during an interview this morning with our Danny Berger in Paris.
I think there was a survey that said 77% of people didn't want Biden to run again. And so when you have that kind of situation, usually something else happens.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Recapping, Instacart up by 30.6%, S&P down 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie. Thank you, and welcome to the Tuesday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where we have nothing but questions about funding the government when this fiscal year ends in just a dozen days. Speaker McCarthy, as we told you, trying to sell a stopgap funding measure. We were told there was a deal on this a couple of days ago to keep things running for about a month. He's got some members of the Freedom Caucus on his side on this, including Chip Roy, who made the case on a conservative radio show on Fox.
Unfortunately, some of my colleagues don't think that's good enough. They want to hide behind some other rhetoric. They want to hide behind, we need to do more on DOJ or do more on this or that or the other. There's no Ukraine supplemental. There's no disaster emergency supplemental. There's simply a strong bill that would do what we need to do to ratchet back the federal bureaucracy that's been at odds with the American people and force their hand on the border, which is a strong national message. I think that's a win.
Some of his colleagues he refers to include Congresswoman Anna Paulina Luna, the Republican from Florida, showed up on a local TV interview and made this prediction.
sounds like, and I'm just going to inform everyone that's tuning in right now, it sounds like we're going to be going to at least a 10-day government shutdown. But hopefully during that time, people will actually be able to, take time. Look, it's not going to affect Social Security. It's not going to affect Medicare. But the fact is that we need to make sure that we are not, one, funding a bloated government, but also, two, that we're not funding a weaponized government. And so we have to address that as Congress.
Whew. All right. So 10-day shutdown. That's what she's hearing. What are you hearing? So much for the continuing resolution. Speaker McCarthy, he's sounding a bit frustrated when talking with reporters in the hallway.
I've never seen anybody win a shutdown. You only put the power in the hands of the administration. If you want to secure the border, pass Homeland. If you want to make America strong and secure, you pass the DOD appropriations bill. If you're not willing to pass appropriation bills, and you're not willing to pass a continuing resolution to allow you to pass the rest of appropriation bills, and you don't want an omnibus, I don't quite know what you want.
I don't quite know what you want. All the while, a procedural vote to clear the path for a continuing resolution, this is just the rule, not the bill, appears to have been pulled on the House floor today. So we're glad to have some time with the ranking member of the House Budget Committee. Congressman Brendan Boyle is back with us, the Democrat from Pennsylvania. Will act literally as a news reporter, I guess, in this case, because it's pretty difficult to follow the beat inside the Budget Committee. By the way, Republicans on the Budget Committee set to roll out their budget plan this afternoon. Congressman, it's good to have you back. Can we start with this procedural vote? Is this continuing resolution now in peril?
Well, I guess this is the debut of my reporting career. I can report to you that actually the CR vote was just pulled. The rule vote for the Republican partisan continuing resolution was just pulled from the calendar. So they don't even have the votes for their own. The Republicans don't even have the votes for a partisan Republican continuing resolution, let alone one that would pass a Democratic Senate and be signed by a Democratic president. This Republican civil war is what is causing this dysfunction. And if Kevin McCarthy would, for once, just stand up to his extreme MAGA base, what he would see is there's actually a strong bipartisan group, maybe of 350 members or so in the House of Representatives, that can pass a compromise bill. We just saw it in June when we raised the debt ceiling and actually passed a piece of legislation that had parameters in there in terms of what next year's spending should look like. So Kevin McCarthy should quit reneging on that deal, go back to it, and whether it's now or a month from now, I think what ultimately passes the House and Senate will look a lot like what we passed in June.
That sounds like you actually see a world in which there's no government shutdown, which I'd love to hear you speak to. But my goodness, what does it tell us when Chip Roy and others in the Freedom Caucus are actually trying to help Speaker McCarthy sell the idea of this stopgap plan? It's not his entire right flank. Things are getting confused, Congressman.
Yeah, the Republican caucus is at war with itself. I mean, all day yesterday, you saw the speaker call one of his members a quitter. People defended her. Another member is fighting with the speaker. It's just been chaos, crisis, and confusion ever since that first week of January, when it took them 15 attempts to elect their own guy speaker.
Is the government going to shut down?
I don't know. I tend to think it's more likely than not, just because I do believe there are far more than 5 members of the House Republican caucus that want a government shutdown. But again, it can be avoided if Speaker McCarthy comes over to our side and is willing to compromise and is willing to do exactly what we did in June. And what I said before is that sooner or later, whether it's before September 30th, which I hope it is, or maybe more likely than not after September 30th, I think the way we get out of this impasse is passing a bipartisan resolution, much like we did in June.
There's talk of a motion to vacate. That's what Matt Gaetz of Florida continues to say. It's clear that Speaker McCarthy is going to need Democratic votes to pass any real budget plan, Congressman. Will Democrats help Speaker McCarthy survive a motion to vacate if that happens?
Well, we're a few hypotheticals down the lane there. So we'll, as the former president likes to say, we'll see what happens. One of the few times I quote the former president. So I really couldn't predict or say Let's see how this budget situation plays itself out before we get into any hypothetical conversation about what Democrats would do in terms of a motion to vacate the chair. I will say what has really defined Kevin McCarthy's, frankly, miserable 9 months as Speaker is him constantly bending over backwards to attempt to win over the extreme MAGA members of his caucus, and they can never quite get there with Kevin McCarthy.
I'm compelled by this idea that you're actually going to be cutting funding more than Republicans proposed. If you take this walk, at least, the idea being if things expire without a budget agreement, there's an across-the-board 1% cut. As we've discussed before, that was a product of the debt ceiling limit deal, or at least what's left of it. Republicans were proposing, I believe, a 5% cut, roughly, in what's coming in here, non-defense discretionary spending. So if no budget passes, the budget is actually cut by less based on what's already been baked into the cake here. Is that how you see it?
So what you're talking about as part of that agreement in June, there was this rather unique mechanism put in place that says if we're still under a continuing resolution come January 1st, not come October 1st, that you would keep the government funded, but at 1% less, both on defense and what is sometimes called non-defense discretionary. But we're still a number of months before we would get to that point.
All right, so give us a sense of what comes next. And I've got an eye on the visit by President Zelensky this week. At some point, there's going to have to be a concerted debate about Ukraine funding, also disaster relief funding, these supplemental requests that the White House has made. Does that visit help to unlock part of that story?
Actually, I think, again, here's another issue where when it comes to standing up to Putin, supporting our allies in Ukraine, you have something like 70% support, 75% support among the American people, maybe 75% support here in Congress. But again, the extreme MAGA members that are really driving the bus when it comes to the House Republicans, they're against it. So the Ukraine funding issue, I think, is going to be quite challenged. It won't be in the Senate, where there is, frankly, stronger Republican leadership, and I think you have a big bipartisan vote over there to continue to stand up to Putin and make sure our allies have what they need. You would have a strong bipartisan vote here in the House if Kevin McCarthy is willing to stand up to his extreme MAGA members and put that on the House floor. Right now, he's just not willing to do it.
There's an appetite among Republican leadership elsewhere, certainly in the Senate. So you do wonder how this pans out with a few voices here. There seems to be a pretty broad majority actually supporting continued support for Ukraine. There's one thing I'd like to ask you about that doesn't come up enough, though, Congressman, and that's the so-called child care cliff, the expiration of funding, pandemic-era funding for child care services, now sunsetting and leaving tens of thousands potentially of child care programs about to expire. President Biden, with your support, did not get the expanded child care tax credit in the Build Back Better debate that some of us have blocked out at this point. But it was a protracted debate that ended up with the IRA. But I wonder if child care is going to be on the table in this debate.
It needs to be. You know, there were a couple provisions that we did during the pandemic that made such a big difference. One of them was the expanded child tax credit that lifted so many millions of children and families out of poverty. We saw this past week the devastating impact of that expiring and more children now below the poverty line. And then likewise, when it comes to the child care crisis, this is yet another. I mean, I voted to make that permanent as part of what was originally the Build Back Better Act. It's a tragedy that the Senate then wasn't able to pass it. So I'm part of a group that's really attempting to put this on the forefront of our agenda. And I do want to make sure as part of these budget negotiations that we address what is a crisis and frankly affects not just those families that need childcare, but it affects our overall economy. It holds back the full growth potential of our economy.
Before we let you go, Congressman, will Democrats make an ally of Speaker McCarthy? Will Speaker McCarthy make an ally of Democrats through the process of this budget debate? It appears one cannot operate without the other.
Well, as I've mentioned before, Kevin McCarthy seems far more interested in pandering to every last MAGA member of his caucus.
That's why I ask you if it's possible, or maybe you're writing him off,
rather than working with Democrats. The one and only time in the last 9 months he was able to reach across the aisle and work with Democrats, we saw a big bipartisan success. When we passed that budget agreement, raised the debt ceiling, 80% of House Democrats voted for it, myself included. 67% of House Republicans voted for it. Kevin McCarthy gets back to that sort of bipartisanship. There'll always be a willing partner on our side of the aisle.
It's good to have you back, Congressman. Thanks for being with us on Bloomberg. He's the ranking member on the House Budget Committee. In the throes of this debate, Congressman Brendan Boyle, Democrat from Pennsylvania. As we assemble our panel, Rick Davis and Jeannie Shanzano are with us for the hour, Bloomberg Politics contributors with a lot to talk about today, and I'd love to have time here to hear from both of you on this. Jeannie, the view of a Democrat in this world, Brendan Boyle, sounds like one that obviously in the minority doesn't have a lot of say in what's about to happen next. How can Democrats affect the outcome of this debate?
You know, I don't think there's much they can do at this point. But of course, if the speaker wants to get something passed, and he's going to have to look to Hakeem Jeffries, he's going to have to look to the Democrats, and he is going to have to work with them. And, you know, I think the fear of some of us is that the decision to throw an impeachment inquiry into this mess in an effort to distract his hard-right conservative end has made that a little bit tougher. But I do think in the end, whether it's to save his job, whether it's to pass a continuing resolution, hopefully to fund a government, he will be able to count on Democrats to do that. But they're going to have to do what has to happen. They're going to have to negotiate that out. And I think Democrats will be prepared to do that. But I think the representative, the congressman, is right. You don't want to, talk about that and insert yourself into a family civil war at this point. But when it comes up and McCarthy decides to come to them, I think that the leadership on the Democratic side and enough Democrats will be there.
Ricky, the congressman didn't have much good to say about Speaker McCarthy right now, and I did give him an opportunity to come back around on that. Is his criticism correct, or will Democrats find themselves at the table with Kevin McCarthy completing a final product at some point?
Yeah, I thought Congressman Boyle actually kind of sounded like he felt sorry for Kevin McCarthy because he's kind of being held hostage by one of the wings of his caucus, and the caucus is in open revolt. And he's trying to get a few things done, like actually not shutting down the government. And today's newsmaker that Congressman just talked about, that the rule that was going to set up the vote for the continuing resolution got pulled, means they don't have the votes for it, which means that you're going to have to wait and see what happens next.
So much for the debt ceiling deal. Rick Davis and Jeannie Shanzano, we'll pick up on this straight ahead with a lot more to talk about this hour. President Biden in New York speaking to the UN. We'll have a lot more on Sound On. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Instacart up and trading. Been trading now for about 29 minutes, and the stock is up 33%. Instacart is the fourth biggest U.S. IPO of the year, according to data compiled by Bloomberg. Again, Instacart now higher by 33%. Stocks are trading lower. We're looking at a 24-point drop right now in the S&P 500 index to 4429, a decline of 0.5%. The Dow is down 232, lower now by 0.7%. The Nasdaq Composite Index down 66 points, a drop of 0.5%. 10-year yield at 4.33%, with a 2-year that's yielding 5.09%. Spot gold down $2.50 the ounce to $19.31, down 0.1%. And West Texas Intermediate crude oil up 0.1%, $91.60 now for a barrel of WTI. So again, recapping here, a day ahead of the Fed decision, stocks are selling off. S&P down 24, down by 0.6%. Instacart, first day out, up and running, up now by 32.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Maybe the problem solvers can fix it, right? There's got to be a caucus somewhere in this House. The Bipartisan Problem Solvers Caucus working out reportedly a clean CR. $16 billion disaster relief, but none of the Republican concessions that we've been hearing about. Is that the plan B? There are so many families to please here in the House. It's getting a little bit confusing. Of course, a lot of this hinges on President Zelensky and support for Ukraine. Incidentally, we're going to be hearing from President Volodymyr Zelensky live from the UN. He'll be standing in front of the Green Marble a short time from now. We'll bring you those remarks on Bloomberg Radio, here on YouTube as well, when they happen. Incidentally, join us on YouTube. If you want to be in the studio here, search Bloomberg Global News. Our cameras are lit. Speaker McCarthy talking about this, by the way, knowing President Zelensky's coming to Washington after that speech. He'll be here later this week to meet with the president, go to the Hill, meet with the leaders, like Mr. Speaker.
Is Zelensky elected to Congress? Is he our president? I don't think I have to commit anything. I have questions for him. Where's the accountability on the money we already spent? What is the plan for victory?
That sounds like a fun meeting. Let's reassemble the panel. Rick Davis and Jeannie Shanzano are here, Bloomberg Politics contributors. What do you think of that, Rick? It's a lot different when someone's sitting in front of you. But McCarthy does not sound like he's looking forward to talking to President Zelensky. He says, what, is he a member of Congress? What's that conversation going to be like?
Yeah, no, I mean, I'm actually stunned that he would take this kind of chip on your shoulder attitude. What's your plan for victory? I hope Zelensky tells him, I'm going to kill as many Russians as I can get my hands on. I mean, like, what in the world does he think is happening in the Ukraine? There's a war going on, and it's a war that they're fighting, not us. And the most we've done is to put some of our treasure to work. And I just find it unbelievable that he doesn't have more sensibility around a guy who's in the middle of a shooting war with Russians. But look, I mean, he's got bigger problems than Zelensky. The reality is he still going to be speaker when Zelensky gets to town? I don't think it's an academic question anymore. And so Zelensky actually may survive longer than he does.
That's pretty remarkable. Jeannie, I don't know your thought on this, but it is different when somebody is coming in person to ask you for something, as opposed to ping-ponging around the media and a reporter is going to ask you this in the hallway and you have to sound like a tough guy to please certain constituencies. Which one do you think shows up at the meeting?
Yeah, I think that all depends, to your point, on whether that meeting is in public or private. I think in private, Kevin McCarthy will be incredibly respectful to Zelensky. He understands the situation over there full well, but this is the Kevin McCarthy that we have seen since he was narrowly elected speaker. And it is a speaker with very little power to run his own caucus. And so he goes out and he says outrageous things, like he said about Zelensky. Is he president? Is he a member of Congress? And then he'll say something else privately. It's the same thing he said after January 6th. when he chastised the president, rightly so, for his role on that, and suggested he can't continue to serve. And then, of course, not that long after, went down to Mar-a-Lago, hat in hand. So, you know, this is Kevin McCarthy in the position he finds himself in as he desperately tries to maintain this job. And I think the question that has to be asked about Kevin McCarthy, is this job worth it? You have to be able at some point to stand up for what you believe. And with Kevin McCarthy, we see him say one thing privately, one thing publicly, one thing to Zelensky, one thing to reporters, one thing to his caucus. I mean, it goes on. And at some point, he may not have this job much longer because he's been too cute by half. And I think it's an awful shame for Kevin McCarthy to be in this situation.
Well, you guys agree on that one. As we consider what's happening all the while in Detroit, I've got to ask you both about the strike here as we stand by to hear from President Zelensky at the UN. Friday deadline, noontime, high noon, says Sean Fain. The UAW, as I read on the terminal, says more of its members will go on strike at all three of the big three if deals are not in place by then. Maybe we haven't really even seen the hardball yet. Rick, what do you think? Does a deal emerge ahead of the deadline?
Yeah, I actually think the UAW did a brilliant move. Hate to give them credit for this, but the standing strike, only 3 locations, a lot more leverage to do, use the week very effectively to draw a distinction between the ultra-rich executives and the blue-collar workers that are making the cars. I think he's played this week as best as any labor union leader I've ever seen, splitting the politics, having Donald Trump, basically looking like he's trying to directly appeal to UAW workers. And the president, who seems outflanked by that, is caught in between wanting the economy to move forward but not wanting to look like he's helping a bunch of rich executives. I mean, this is a mess of epic proportion, and I think the UAW seems to have everybody on the run. I wouldn't be surprised if they don't increase the strike after the Friday deadline. I doubt if they're going to get a deal done because I don't think there's enough pain in the corporate boardroom right now. But after Friday, I think all bets are off, and you could probably see something happen pretty quick.
Well, the debate among Republicans is fascinating to me, Jeannie, and as a Democrat who supports unionized labor, I would love your take on this. J.D. Vance, with an op-ed in the Toledo Blade. With this moment, he writes, the UAW leadership has an opportunity they cannot let slip through their grasp. Should use their leverage and force the president to stop subsidizing an industry that benefits communist China more than it does American workers. That's an op-ed that's resonating today. On the other side of things, and by the way, Rick also referred to another big part of this. It's Donald Trump going to speak to UAW members in Detroit instead of attending the Republican presidential debate next week. On the other end is Senator Tim Scott. Imagine this, as Donald Trump courts an endorsement from the UAW, Tim Scott calls up Ronald Reagan and talks about potentially firing unionized workers who go on strike, with memories of those were, of course, federal workers, air traffic controllers back in the 80s. Here's Tim Scott on the campaign trail.
I think Ronald Reagan gave us a great example when federal employees decided they were going to strike. He said, you strike, you're fired. Simple concept to me. To the extent that we could use that once again, absolutely.
You're striking, you're fired, Jeannie. Which one of these approaches of all three might stick for Republicans?
I have to say here, I think J.D. Vance and Donald Trump's political instincts are much better than Tim Scott's on this issue. They understand the reality is the Republicans had the White House in 2016 because they were able to make inroads in the Midwest. Michigan is critical in 2024. Joe Biden narrowly captures it in 20. If he loses it, Donald Trump or whoever the Republican nominee is likely to win. And it seems to me that Donald Trump understands that full well. He speaks a language that appeals to workers on the line. The problem is his policies haven't followed suit. So while he's trying to use this cudgel of China and he's trying to talk about to EVs, I think Sean Fain is right to point out that you have a millionaire billionaire talking to people on the line about what he's going to do for them. It falls flat from the perspective of the leadership of the UAW. But I think Trump is right, and so is Vance, to try to make this play. I think Scott's got to wake up to the reality of the way the Electoral College works this day. And this is a really important constituency to appeal to. And Vance and Trump know that.
How does President Biden answer this challenge then, Rick? Does he show up on the picket line? Does he come up with some sort of special one-time unemployment insurance for workers? How does he seize the moment?
Yeah, I think he's got to have some of those options in his toolkit right now, and I'd say he's got less than a week because he wants to do whatever he's going to do to help benefit the UAW workers. He's got to do it before Donald Trump shows up there, because Donald Trump will tell them what they want to hear and with no real intention of doing anything about it. But I think it's a broader issue here is like how far the Republican Party has come from supporting free enterprise and corporate America. I mean, these corporations don't have a friend. I mean, look at DeSantis. He's out there attacking corporations every day. You know, they're too woke. They're too involved in politics. And, you know, here are our politicians now getting involved in labor strikes, not on the side of the chief executives in the boardroom, but on the side of the union organizers. It's really amazing. And so if corporate America gets one message out of this, you know, like they need to take a look at what kind of politics they're playing, because they don't have a friend at the in the game right now, and they need to go find some.
It's kind of amazing. Republicans are now the party of union labor and tariffs. I don't know what's going on. Rick and Jeannie, stay with us. We're going to focus on the UN coming up more, what Joe Biden had to say today, the case that he made, and how that may resonate back home here as we anticipate President Zelensky's visit to Washington. Let's bring you up to date on world and national news. Meantime, with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Joe, you're just mentioning it. We're waiting to hear from Volodymyr Zelensky at the UN. Earlier today, President Biden called out Russia for its invasion of Ukraine, and he told UN leaders no nation is secure if Ukraine's land is stolen.
If you allow Ukraine to be carved up, is the independence of any nation secure? I'd respectfully suggest the answer is no. We have to stand up to this naked aggression today and deter other would-be aggressors tomorrow.
Biden's message of unwavering support for Ukraine is playing out as Congress is increasingly divided over providing additional funding. Defense Secretary Lloyd Austin is drilling down on the specifics concerning Russia's invasion of Ukraine. He's been meeting with the Ukraine Defense Contact Group and offering an assessment of where things stand.
Ukraine's counteroffensive continues to make steady forward progress, and brave Ukrainian troops are breaking through the heavily fortified lines of Russia's army of aggression.
Austin says American-made Abrams battle tanks will soon arrive in Ukraine. 5 Americans freed from Iranian captivity are now back in the U.S. They were greeted at a Virginia Army base early this morning by Special Presidential Envoy Roger Carstens.
On behalf of the President of the United States and the Secretary of State, it's an honor to be the first to welcome you back to the United States of America and to freedom.
Roger Carstens says the 5 will go through the Army's program on post-isolation support. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Instacart up now by 31.1%. Instacart out of the gate at $30 a share. Right now, Instacart is at $39.25. Again, that is a advance right now of 31%. Stocks are trading lower, close across the board here ahead of the FOMC decision tomorrow. We've got Treasury yields rising. We begin there with the 10-year at 4.33%, the 2-year 5.08%. Stocks lower with the S&P down 20, a decline of 0.5%. The Dow down 206, lower by 0.6%. And NASDAQ is down 56 points, a drop there of 0.4%. Spot gold lower now by $1.50 the ounce to $19.32, a drop of 0.1%. West Texas Intermediate crude up 0.1%, $91.56 on WTI. The Commerce Department says housing starts dropped to a 3-year low. And with that story, here's Bloomberg's Vinny Del Giudice.
Apartments and other multifamily projects led the decline in August construction starts. Single-family home projects also dropped as rising mortgage rates and elevated prices deterred potential buyers. Hurricane Hillary may have affected Pacific states as well. Home builder confidence is also fading based on an industry survey. Vinny Del Giudice, Bloomberg Radio.
Home builder stocks trading mixed now. We've got Lennar down 0.2%. KB Home, which reports tomorrow, up 0.1%. Toll Brothers down 0.3%. Again, recapping, S&P down 21, down 0.5. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We stand by to hear from President Zelensky, leader of Ukraine, standing at the UN a short time from now, and we'll be bringing you his remarks live here on Bloomberg Radio, on satellite radio, on YouTube, as you would expect. Already today, though, we have heard from President Biden. He spoke a bit earlier, a couple of hours ago. As we see the headline on the terminal, Biden urges UN to stand by Ukraine as allies see long war ahead. Of course, this was for an audience around the world, not just those at the United Nations General Assembly, and certainly those in the U.S. House of Representatives.
If you allow Ukraine to be carved up, is the independence of any nation secure? I'd respectfully suggest the answer is no. We have to stand up to this naked aggression today and deter other would-be aggressors tomorrow. That's why the United States, together with our allies and partners around the world, will continue to stand with the brave people of Ukraine as they defend their sovereignty and territorial integrity and their freedom.
Applause for the American president today. Standing up to aggression today, deterring aggression tomorrow, the message. Let's reassemble our panel. Jeannie Shanzano and Rick Davis are Bloomberg Politics contributors. Is that the case, Jeannie? That's essentially the argument he's been making for 19 months. Or does he need to start altering that argument to tailor certain interests here in the Capitol?
Yeah, I mean, I think it's an important argument, and I thought the speech today was fairly good. I thought it was very strong on the issue he talked the most about, which was obviously Ukraine. I do think he needs to be cognizant of not just the world audience, and that is critical, but also the audience here at home. And I've long thought he needs to do a better job, and it's a hard job, of letting Americans know why they have an interest in continuing this level of monetary support for Ukraine, because this is where we see poll numbers dipping, not just with Republicans, but with Democrats. And it's not that the American people don't support Ukraine in the fight against Russia. It's that they're concerned about sending resources. And I think there's an important argument to be made about why that's in our interest. But I think that should be a big part of the focus. So I thought he missed a little bit of that today. But overall on Ukraine, I thought it was a good speech, not so much on climate change, where I think he's going to get hit very hard. And he already has, but I think he'll get hit harder by activists. And that's a problem for him domestically, let alone for people around the world.
Well, Jeannie does remind us this speech was about a lot more than Ukraine. I'm zeroing in on that point as we're kind of talking about the budget debate here in Washington. But knowing that President Zelensky will be here, Rick, does this set the table for what's going to be a much louder conversation at the end of this week?
Yeah, I actually shockingly agree with Jeannie on the need for Biden to have done more to lay out why the American people should care about Vladimir Zelensky and the Ukrainians. But I think it should have started with a full-throated attack, not on Russia. Russia didn't start the war. Russia didn't invade. Vladimir Putin did. And I'm just stunned that Vladimir Putin is basically getting away with a bye from the President of the United States in a speech to the UN. Here's a guy who's like running out of troops and running out of ammo. So he's going around to every two-bit dictator in the world he can find, begging for armor so that he can use in a country that he's invaded. I mean, I think it could have been a much more ferocious speech by the president. And that would remind everybody in Congress, you have one side to be on, Vladimir Putin's or ours. And I think when you put it into that context, there are a lot of people who'll be voting yes on a funding bill for the Ukraine.
Well, that's a reality check for the naysayers here in Washington. Certainly, Jeannie, it's an interesting debate here that we're hearing, and I'm not sure what your expectations are later on this week. But should funding the government rely on funding for Ukraine here, or should Congress be handling this as a separate matter?
You know, I do think it makes sense to handle it with the emergency aid that needs to go out to so many places impacted, including Hawaii, which hasn't gotten as much attention of late, and other places that have experienced that. So I do think it makes sense to do it that way. I think the reality is, and I love how Rick is saying shocking when he agrees with me. Rick agrees with me more than he wants to admit. But
disagree all the time.
I do think the problem that the Republicans have is when you talk about Putin, you have a small group, but a sizable, powerful, loud group in the Republican Party who are fine with being together with strong men like Vladimir Putin. And that comes right from the top, people like Donald Trump. So, that's a problem for the Republican Party. But for Democrats in the administration, I agree that would be a tactic for Biden to say. But I think most importantly, he's got to make the case, as he's tried to make to his credit throughout his presidency, that this is a struggle much bigger than Putin or Russia. It is a struggle between the autocrats of the world. And when we say they are winning, the data supports that. And democracies like ours, which are in enormous upheaval. Look at what's happening with Modi in India and Canada today. We haven't even talked about that. I mean, democracies are in peril. We have an obligation in the United States to lead us through that for people around the world. And that's a message I think Biden's got to send to Americans at home and Democrats, small d, around the world. And it's far bigger than any sort of bipartisan or partisan bickering in the U.S.
Rick, do you buy the argument that it's advantage Biden because so many other world leaders are not there? You already mentioned Putin, President Xi's not there, Macron's not there, Sunak's not there. Does that help him maneuver more effectively at the General Assembly?
Well, I certainly think it sends a message that the U.S. is willing to engage when others are stuck at home, either because of their own crises or that they really don't think it's a welcoming venue for them. So look what he's done. He's gotten this really cool Atlantic Council that he's put together that he announced, I think, on the very first day. He's meeting with the Central Republics today. Now, anytime you can get the stands in one room without Russia hovering over it is a good day. And so I think that's a really important place in the region, and he's spending more time with the Global South. We've talked a lot about that and how important it is in the competition we're having with China. So, I think it's a good use of his time. Frankly, I think he ought to stay in New York and keep doing it. Don't come back to Washington for a while because this town is not set for him right now.
Well, I'll tell you, he's coming back, and this is going to be interesting Thursday, Friday. It's all anyone will be talking about here is funding for Ukraine and how it plays into a potential shutdown. Great insights, as always, from Rick Davis and Jeannie Shanzano. They do agree fairly often. Our signature panel here on Sound On. This is